Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, the market has been steady after, a little bit of volatility that we saw. But let's see big events upon us. You have the RBI policy tomorrow as well. Let's see how the day progresses.
Well, that's right. And it's feeling like a longer week, right? And we still have 2 days to go. We're getting used to the shorter week. And it's a big week because tomorrow you have the RBI, then you have the jobs data that comes out later tomorrow. So we still got plenty in store.
Plenty in store. And, it's, I think, going to be an interesting day because the last two sessions, the market has essentially seen large intraday recoveries and then flat closes. But, I can't take away from the big 100-plus point easy recoveries we've seen consecutively, over the last two trading sessions now. So, and that kind of gives into the mantra, which has been absolutely intact and, working very well, which is buying the dip. And the dips are, of course, shallow. They're 100 points, 150 points. When you get a correction, what you can call a correction, it's 3.5%, right? From the highs of January to the lows of March. That's about it. And the market moves right back up. And we said this yesterday as well, that there is enough, so to speak, masala here in the market, in the Indian market, as far as triggers are concerned, things to watch out for, etc., which perhaps could keep things buoyant if you can look through some of these dips and some of these down days as well. Now, overnight, it's looking a little better. Last 2 days, it was not looking better, but market held on very strong. So, when markets overnight and from the global arena looking a little better, can we do better as well? So, S&P ended about 0.1% higher. The Nasdaq was up about 0.25%. So, two things which I think markets liked. One is the ISM services data which came through. And the other was comments from Fed Chair Powell once again. So, in the last 2.5 weeks, we've had comments from Fed Chair Powell thrice. And he's been consistent. He's been dovish. I'll get to that in just a bit. But ISM services first. Remember, services is the more stickier, more important, larger part of the U.S. economy. So that ISM services data showed that services continue to grow. It continued to expand. But the employment component within services is weakening. So labor markets seem to be loosening a little bit. So that's point number one. Powell basically said, and he kind of reiterated, that although growth is looking good, but that should not interfere with the process of disinflation. So that was the other comment which came in. So combined what we saw with ISM and, of course, what we heard from Fed Chair Powell, you had a bit of a relief. It's not as if there was a big turnaround in yields or anything, but they didn't go higher. Actually, the 10-year had gotten to about almost 4.4% yesterday, but then they cooled off. So we ended at about 4.35. Day on day, unchanged. Dollar index was down 0.5%. That's a more pronounced, meaningful change. And that ended at about 104.23 coming through. It's not as if it's all one way, right? I mean, you're still hearing, for example, you had the Atlanta Fed President Bostic, who reiterated his hawkish stance and saying that the Fed needs to be patient. So there is that thread, that element, that worry of higher for longer, which very much is there. It's not as if it's not there. But of course, I mean, Powell is boss man as far as Fed is concerned, and others would be relegated to second, third, and fourth positions. Now, oil prices, that's the one thing which continues to move higher. And we've been saying how commodities, the cocktail for commodities, be it the China reboot, geopolitical tensions looking a little worse off, will perhaps keep commodities on the boil. Oil prices, slowly but steadily, they're getting to the $90 a barrel mark. So, that's the one negative. Otherwise, two or three other factors on the other end are looking a little better. Now, we are here, as I said, we've had flat closes, absolutely flat closes. Dips have been bought, but flat. We are waiting for a decisive break above the 22,526. A decisive close, actually, above that particular number, which has not come yet. Once you get that, then you can kind of talk about higher levels. The range shifts to 22,640 to 22,830. That's the broad range. For the Nifty Bank, which, by the way, has also been consolidating, watch for 48,161 to 48,636 kind of levels on the upside, and supports which the Nifty Bank should not break. That's yesterday's low, by the way, 47,279. So, that's the setup here. it's worked it's worked and it's paid off to buy even those small 100-point dips along the way over the last 2 days. This morning there is no dip. We're indicating a 50-odd point higher start. The question is, can we really build on it in a big way? Sonia.
Oh, absolutely. And it's this flip-flop in the market, right? A little bit of that. But by and large, this has been a very stable market around the 22,400, 22,500 mark. The Nifty has been holding steady. In fact, the Nifty bank is now at a 1-month high. So there is a little bit of participation coming in from some of these heavyweights like banks as well. Now, the strong domestic buying is something that continues. It's been 11 straight days we've seen money come in from the domestic markets, institutional equities that is. DI has bought 4,260 crores in the cash markets in the first 3 days of April. So that's the kind of spending that we've seen and the support from the domestic community. By the way, this morning, the Asian markets are also doing quite well. We've seen a good rebound after Jerome Powell's comments that came through. Powell, of course, emphasized the need for more evidence that inflation is easing before taking any call on rate cuts. So that's the important thing to keep in mind. On Friday, that's tomorrow, you'll have the RBI policy outcome as well. Now, a couple of stocks and pockets that I'm watching this morning. One is the entire consumption piece because Avenue Supermarts came out with a very good set of numbers. Their quarterly update was quite strong. The standalone revenue went up almost 20%. The store edition went up about 12.5%. So that's one pocket I'm watching out for. And the NBFCs are also going to be in focus this morning. This is after, the updates, business updates from L&T Finance and RBL Bank. Have been pretty strong. So in the NBFC space, it's L&T Finance, which has seen a retail disbursement growth of 33%. And in the banks, it's RBL Bank that has seen the highest deposit growth in the last 12 quarters. So these are a couple of pockets I'm looking at, banks, NBFCs, as well as the consumption space. Some good business updates coming in from there. But crude is the only worry because almost at $90 a barrel now, that seems to be a bit of a sticky spot for our markets. But what are you watching?
Well, that's right. The crude on the boil isn't such a great thing. But I think one positive is that the dollar index cooled off. So both those two could offset a little bit each other. Well, yesterday, after a while, we saw that the FIs added short positions and they added more shorts than long positions. And the short, though the markets are net short, well, yesterday, in fact, we did see that close to around 14,000 contracts were added on the short side from the FIs. And the net short positions now go to around 31,000 contracts. And getting into a big event like the RBI policy as well as the big jobs data point, I wouldn't be afraid if this net short position goes even to 50,000 odd. In fact, it'll be a blessing in disguise because any kind of positive surprise could lead to a big short covering bounce. On the options data, remember today we have the weekly expiry that plays out. And you are consistently seeing writing at around the 22,500 call. Even in yesterday's trading session, there was a big open interest surge out there. The total open interest is at 1.25 crore odd. Premium has come down to around 33 odd, which gives us the levels. Last few sessions, we're trying to get past the 22,500, 22,550 odd mark. But from there, we're seeing some bit of a resistance. So that's the crucial resistance zone that comes up for you on the screen. The 20 DMA becomes a reference point on the downside. Even for the Nifty Bank, the 20 DMA will be important on the downside. So that's the mark you need to track. And on the upside, that 47,900, 48,000 odd, that's the near-term resistance. If that gets passed, then you're looking at fresh all-time highs, which will be very, very good for the Nifty itself. Well, everyone's talking about this mid and small cap bounce back, and that's really been the space to be, right? So if you look at it from the March lows or from the March scare that we had, well, we've seen a good bounce from those lows. And the mid cap index, well, it's already made a fresh 52-week high out there. But the small cap index is still around 3.5% away from there. And there are plenty of stocks that are still down 20-25% from the highs that we saw in March itself. So that could be the space that could continue to see a lot of interest because a lot of stocks out there got really beaten out of shape between March 11th to around March 14th. So keep an eye out on that space. The stock that I'm tracking today is Vedanta as well as Hindustan Zinc. Everyone's talking about crude oil prices moving up, about metal prices moving up. Well, Vedanta is the company that gives you exposure to all the metal companies. So whether you're talking about crude, aluminium, zinc, everything, it has everything in there. And zinc, Hindustan Zinc, because zinc prices as well as silver prices have moved up. And there's only one listed company in India that you can play via this silver play. Silver is at a 2-year high. You have the dollar index that's cooled off. That's normally a recipe for, Vedanta. And, that's the contribution that Hindustan Zinc gets in from their silver business. Remember, it's a byproduct, so that's why margins are very, very high out there. And it contributes a good amount to its EBIT. But Hindustan Zinc is a little less liquid. And it's, Vedanta is the promoter of Hindustan Zinc. So a more liquid name will be Vedanta. The play on silver is really Vedanta and them. And, Vedanta is the one that holds close to 64% stake out there. If you look at a reference point, the 20-day MA comes in at around the 275 odd mark for Vedanta. So Vedanta and Hindustan Zinc, they'll continue to remain on focus because of the surge we're seeing in crude oil prices, the surge we're seeing in base metal, and they're the only way to play the silver surge that we're seeing, which currently is at 2-year highs.
All right, Nigel, thanks very much for that. So commodity is very much in the focus, as we've been pointing out. So watch out for the stocks. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Jeffrey Dennis, who's the independent emerging markets commentator, will join in to discuss the global setup. Our research team will get you CNBC-TV18's list of top 10 stocks for the day. At 8:30 this morning, we do a fundamental stock check with expert Hemang Jani.
Okay, let's quickly start off the show with some market opinion coming in for you. First up, the best of the brightest minds. Rhythm Desai of Morgan Stanley says the earnings cycle, strong macro stability and a domestic bid will likely continue to power Indian stocks forward, albeit valuations remaining a key headwind for the near term. He says any worsening in fundamentals, an adverse election result or bad global macros are sources of risk. He says they are overweight financials, technology, consumer discretionary and industrials and underweight other sectors. That said, he adds the macro trade could peak in the coming weeks.
Okay, some money market views here. Parul Mittal of Stancy says that the USD INR has moved higher in line with a stronger US dollar and higher import demand at the back of rising commodity prices. She says positive USD INR fundamentals stay intact. However, thinks that the pair is likely to mimic the dollar in the near term. She expects the USD INR pair to trade between 82.25 to 83.65 to the dollar in the week ahead.
All right, and on the bonds, Parul says the Indian 10-year bond yield drifted higher on rising commodity prices and global yields, and markets are slowly pairing expectations of Fed rate cuts in 2024 on the back of better than expected data from the US. She says the Indian MPC is expected to maintain a status quo on policy rates, keep its stance unchanged and strike a cautious note, especially with crude oil prices near $90 a barrel. She expects the 10-year benchmark bond yield to trade in a range of 7.05 to 7.15% in the near term.
Well, we've got a lot of stock-specific action track for you. We highlight all the top stocks now, the top 10 stocks that we're looking at today. Vodafone Idea, L&T Finance, RBL Bank, Poonawalla FinCorp, Avenue Supermarts, all of them will be reacting to positive news flow. Add to the list, Brigade Enterprises and GE Power India. On the flip side, we have Angel One, ONGC and KEC International that will be reacting to negative news flow.
Okay, well, Jeffrey Dennis is now joining us, independent emerging markets commentator. Jeffrey, good to have you with us here. Thanks very much for your time. Our markets like India, by the way, there is, of course, elections here as well over the next couple of months. But is the trajectory looking good? Disinflation in the US means the dollar going down. And dollar down, I think, has meant the same thing for the last couple of decades, which is, positive flows into emerging markets. Just wanted your thoughts on EMs and India specifically, Jeffrey.
I completely agree. We like to see the dollar going down as far as emerging markets are concerned, and I think that will happen later in the year, and that's why I'm still fairly constructive about EM. EM is up a couple of percent this year, 2.2% as of last night, as of this morning, and I expect EM to be up about 10% this year. So I don't think it's going to be a huge year, but it's going to be a decent year. Now, the issue here, of course, is, as you will have alluded to, is that there's some doubt about now the pace of U.S. rate cuts and how many you'll get over the rest of the year. And obviously, Powell pretty much said the same thing yesterday by arguing that they need more evidence before interest rates can come down. So what you're doing here is you're seeing this rate cut scenario pushed out further. I think you get 2 rate cuts only in 2024, and it's going to be complicated, I think, by the timing of the U.S. election. The Fed doesn't want to cut the first time just ahead of the election. So I think we get the first cut in July. But the point is here that I think the narrative is still intact, and that narrative is lower U.S. rates, lower U.S. yields, lower dollar, eventually markets doing better, and or at least global equity markets doing better, and EM doing better as well. And so I think the outlook is good. It's just getting pushed back a little into the future. I like India within the scenario. There is some talk now around that people are switching out of India and going back to China. I think that's very premature. I think India will be a big beneficiary of this narrative as it kicks in later in the year. And you've already just mentioned oil prices. That's a big concern for India, so we have to keep an eye on those.
That's interesting. You talk about the narrative where a switch from India into China is being talked about. But Jeff, hi, morning. Thanks for joining in. We have a big event upon us, which is the elections, right, in the middle of May. I want to understand from your end, from the number of years that you've watched the market, do elections have any major impact? Because the expectation is this time the ruling party will come back into power for the third term. Do you think that will instill a little more confidence in the Indian markets?
I think it'll instill more confidence in the Indian market, but I don't think it'll be a huge positive, on election day or when the results start to come out, I guess, which is going to be in May, or I shouldn't say election day, of course, I should say election days, because I think everybody pretty much knows what the outcome will be. I think the only way in which the Indian market will be significantly impacted by the election would be if there was some negative surprise and BJP didn't do quite as well as anticipated. So I think BJP does very well. I think there doesn't seem to be much doubt about the election result. Modi will remain as Prime Minister. So I think it's supportive of the overall story, but I don't think the Indian market gets a big boost from this. I think India is just still a place to be because of the growth story. Obviously, you pay high multiples for most of the stock market. But I think in this world where there's still enormous uncertainty about China, which continues to be a drag on the EM index, I think if you get an expected election result in India, you get evidence eventually that inflation comes down a bit more in India, and you start to see the possibility of rate cuts down the road. And this narrative in the US, which has been delayed, it's not ending the narrative, which is lower rates, as I say, and eventually a lower dollar. All of that is very good for India over the rest of the year. So I fully expect to see India outperforming. I think the election will support that, but I don't expect the election itself to be a big event for the market because I think the result is discounted.
All right. Hi, Jeffrey. Morning, and good to hear your comments. So India continues to remain the top preferred market, but maybe part of the good news with regard to the election outcome is in the price. What about the US market, Jeffrey? I mean, in the last 1 year or so, you're talking about the mother market that's up 25% plus. How do you see those markets pan out, and the preference between developed market versus an emerging market like India?
I think over the course of the rest of the year, as this narrative kicks in, as I say, of lower interest rates and lower dollar, I think emerging markets will close the gap with the developed markets. Developed markets, as of this morning, are up about 8% year to date. And so there is a gap there. It's not a huge gap. But I continuously point this out, that if you strip out China from the EM index and strip out US from the DM index, you're getting very similar performances. And I think that eventually, once the narrative, once you do get those lower rates in the US, you do get some pulling back again of bond yields, and the lower dollar is crucial. As you said right at the top of my interview, the lower dollar is crucial. I think emerging markets will start to see some significant inflows, which will push the asset class higher over the rest of the year. Now, I think the US market is fine. Of course, it's got it's very much the flavor of the month, if you like. And of course, the so-called Magnificent Seven are dominating here. But I don't see in this environment, short of there being suddenly either a reacceleration of inflation, in which case watch out for the oil price on that front, or in the event there's a sudden deterioration of the economy and we go into recession. I don't see, except in those two events, the U.S. market doing anything else other than just rising still. I'm sure erratically, but if this narrative, as I say, plays out over the rest of the year, and for that we need those Fed rate cuts to begin, I think some of that money will switch out of the U.S. into EM. I think both asset classes will do well, but I think EM will eventually come to outperform the U.S. this year, and India will be an overweight as far as I'm concerned.
All right, EMs will outperform the US this year and India will be an overweight. That's what our viewers want to hear, is it not? Thanks a lot, Jeff, for joining in and giving us your view. We'll slip into a quick break. On the other side of the break, we have our entire research team joining in to help us with the top 10 stocks that you need to watch out for the day. Stay tuned. Welcome back to Bazaar Morning Call. Plenty of stocks to talk about, so let's get straight to it. Vodafone Idea is the first one that we're looking at this morning. Reema's here to tell us why she's watching that one. Reema, over to you.
Hi, thanks so much for that. So there is a board meet scheduled on Saturday, 6th of April, where the board will consider a fundraise from the promoters up to 2,075 crore rupees. This will be done via the issuance of equity convertible securities on a preferential basis to either one or both the promoters. Remember, one of the promoters is the Birla Group and the other one is Vodafone PLC. In the past, the promoters have committed to about 2,000 crore of a fund, of an equity infusion, and looks like that's going to, come to a fruition. Once the promoters infuse money, it gives confidence to go ahead to the external investors to raise the balance 20,000 crore rupees that the company wants to raise to roll out its 5G, accelerate its 4G capex and pay down their debt, and also go ahead and look at the bank raising. So this promoter infusion is going to be very crucial, and 6th of April is when the board will give its nod to raise 2,075 crore rupees from one or both the promoter groups. Back to you.
Okay, all right, Reema, thanks a lot for that. Well, let's hop across to Abhishek. Abhishek, morning. There are a lot of banking updates that came overnight. Take us through some of them.
Well, yes, Nigel, many lenders have given their provisional business update for Q4 FY24. To begin with, L&T Finance, the retail AUM growth is really strong. The retail disbursements are up more than 33% YOY and about 3.7% sequentially. This has led to retail AUM growth of 31% YOY and about 7% sequentially. The disbursal to AUM ratio has remained steady for them at 35% versus close to 37% in the previous quarter. So, steady state of business for L&T Finance. RBL Bank, the deposit growth has actually surprised. Our deposit growth is nearly 22% YOY, which is the highest that you are seeing in last 3 years, and about 11.55% on a sequential basis, which is the highest that you are seeing in last 5 years. CASA ratio, one of the phenomenon that every lender is fighting with, has actually improved for them on a sequential basis. Advances growth at 19.2% YOY is perhaps one of the lowest in last 3 quarters, but sequential growth is at 4.5%. Now, CD ratio has declined sharply by almost 550 basis points on a sequential basis on account of strong deposit growth. Poonawalla Fincorp, the strong growth in terms of business momentum continues for them. Disbursals are up close to 52% YOY and about 10.9% sequentially. This has led to AUM growth of 53.6% YOY and about 13% sequentially. Their asset quality continues to improve. Gross NPA ratio is down to 1.2% versus 1.3%, and liquidity in the balance sheet is up 25% sequentially to about 3,600 crores. Back to you.
Abhishek, thanks very much for that. But let's move on from banking to retail. Avenue Supermart's business update. Mangalam has got details. Mangalam, morning.
Good morning. So, DMart could be one of the stocks of today's trading session, and that's because it's a good update that has come in from the company. A 20% revenue growth that they've reported in the fourth quarter on a standalone basis. Why is this a positive? Because one, 4-year CAGR is around 14%, so revenue growth is higher as compared to the average. Secondly, the store addition year on year is 12.5%. So what it implies is that the revenue growth is higher than store addition, which means there is high single digit or low double digit sort of same store sales growth. And that would be the highest that we've seen in the last many quarters. The second big positive is that store addition has also picked up. Typically, the company adds the maximum number of stores at the end of the year in the fourth quarter, and this time around as well. 21 stores is what they've added, meeting their annual guidance of nearly 40 stores this year. We have to watch out for what the gross margin trajectory is, the performance of non-FMCG products in the sales mix, which are more margin accretive, but that is something we'll know only in the results. Over the last 10 days or so, a couple of brokerages have been positive on DMart as well, so expect the stock to do well today.
Okay, thanks a lot for that. Well, Angel One is the stock that could be in focus. Very strong numbers coming through. Client base has gone up 61% year on year. Vamakshi is here to tell us more about that. Vamakshi, over to you.
Well, absolutely, Sonia. When we look at the numbers, however, on a month-on-month basis, gross client acquisition has actually slowed down by almost 16.8% month-on-month. And in fact, this is the third consecutive quarter where the gross client acquisition has seen a bit of a slowdown. The total client base has gone up by almost only 3.8% on a month-on-month basis to 2.22 crores. Angel One relies heavily on the income from the F&O segment, and F&O based on option premium turnover market share has actually managed to slip by almost 25 basis points month on month to 20%. After a brief recovery in the month of Feb, the commodity market share has also slipped by 150 basis points month on month to 58.8%, while the average daily turnover is at 44 lakhs, which is again down nearly 2.6% on a month-on-month basis. Of course, the number of days, trading days were lower month-on-month from 21 in the month of Feb to 18 in the month of March. So largely a weak update coming in from Angel One on a month-on-month basis.
Okay, all right, Famakshi, thanks a lot for that. Yesterday, towards the end of trade, in fact, that stock shot up. So let's see how it reacts today. But let's go to Sonal, who's with us to run us through a news flow on ONGC and Brigade. Hey, Sonal.
Good morning, Nigel. Let me start with ONGC. Because of the crude price move that we've seen, the government has gone ahead. They've increased the windfall taxes on crude oil production to 6,800 rupees per ton versus 4,900 rupees per ton. That's a 40% increase that we are seeing. And this is the fifth hike that we've seen in windfall taxes since February itself. The windfall tax on ATF, diesel and petrol continues to be nil, but this could be a risk for ONGC and Oil India if the crude oil prices continue to go higher. For Brigade Enterprises, the company has entered into a joint development agreement with United Oxygen Company Private Limited to develop Grade A office in the city of Bengaluru. They say that leasable area is 3 lakh square feet with a gross development value of around 340 crore rupees. We'll get more details in the interaction with management that we have ahead.
Absolutely, that's coming up a little later. Sonal, thanks very much for that. GE Power and KEC International are the other names we have on our focus list. Vamakshi's got details here. Vamakshi, hi.
Well, yes, KEC, let's first focus on that stock. The company has secured orders of almost 816 crores across various businesses. These orders include those for civil, T&D, and as well as the cable businesses. Of course, this is a very big order, but the total order intake for FY24 along with this order stands at 18,102 crores. And this, in fact, is lower than what the company had guided for. The company has fallen short of order inflow guidance for FY24. Remember, the company had given an order inflow guidance of almost 20,000 crores. So on the back of that, going with red for KEC. GE Power India also in focus. The company has bagged 2 orders from Jaiprakash Power Ventures. These orders aggregate to nearly 775 crores. Contracts have been awarded for their Nigri as well as Bina thermal power plant, and the execution period is 33 months for the Nigri plant and 30 months for the Bina plant.
Okay, well, HDFC Bank's Q4 update has also come in on the screen. The deposit growth is pretty strong actually, 26.4% year-on-year, 7.5% quarter-on-quarter, and the gross advances are also up about 56% on a year-on-year basis. Looking pretty good there. More details coming up in a bit, but here is a quick update of our top stocks with positive news flow. There's Vodafone Idea, L&T Finance, RBL Bank, Poonawalla FinCorp, Avenue Supermarts, Brigade Enterprises and GE Power. While stocks with negative news flow, there's Angel One, ONGC and KEC International. But let's also get you an update on what's happening in the world of commodities, because Brent crude has been inching higher, now almost at $90 a barrel. Manisha Gupta is joining in to give us a roundup of all the action there. Manisha, morning.
Morning, and thank you for that, Sonia. Well, yes, the crude oil prices have continued to hold above that 89 mark, and we've seen prices gain up by almost 16% this year until time. Well, the wider Middle East conflict really seems to be adding premium to the prices. Addition also because of the decline in dollar index that has been supportive, and with the U.S. Fed Powell speech yesterday that the lower policy interest rates would likely be appropriate at some point this year have done the trick too. So not just the crude oil prices, which by the way are trading at a 5-month highs, you have all the metals surging up to multi-month highs, and gold for that matter. Today is the 8th straight day that you have gold scaling a new record high, and this time above $2,300 an ounce. If you look at the COMEX June gold, that is crossed above $2,320. So when you look at the further months, the prices are even higher, suggesting a higher trend to continue. It is absolutely overbought on the charts, but the momentum still on the higher side, and gold and silver both shining bright right now too.
Oil, gold, silver, I mean, commodities are having a field day, isn't it, Manisha? Thanks very much for joining us with all those details, and we'll have more with her. I mean, from a stock market perspective as well, I mean, that's the pack which is outperforming. So more on this as we go along. Himang Jani will be joining us on the other side with some fundamental stock check. We'll discuss some of these business updates and, of course, the moves over the last couple of days. Stay with us.
मैंने मेरे सीईओ को बोला
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, it's that time of the morning where Hormuz joins us to run us through all the brokerage notes that he's been reading. Hey, Hormuz, morning.
Morning, Nigel, and some interesting notes coming in this time. First up on the banking sector, where UBS has maintained its neutral stance on the entire sector, and they're saying that there is a limited scope for re-rating for the entire sector considering the flattish earnings expectations for the quarter. Now, when it comes to early delinquencies in business loans, they have risen by almost 80 basis points from March of 2023 is what UBS is saying, and as a result of which they have retained their sell recommendation on SBI with a price target of 570. They've also retained their sell rating on Bajaj Finance with a 6,800 rupee target, and they remain neutral on banks like Axis Bank, Bank of Baroda and NBFCs like Chola, and among the preferred picks in the sector include the likes of HDFC Bank, ICICI Bank and IndusInd Bank. Now, Goldman Sachs has initiated coverage on a couple of pipe companies, on Astral first up with a target of 2,300 and on Prince Pipes with a target of 720. Then they are saying that the total addressable market for the entire real estate segment for pipes is likely to grow at a 14% CAGR between FY24 to 28, and the profit pool of real estate is also likely to grow by a 17% CAGR over the same time frame, and they are expecting the overall pipe sector total addressable market to reach $7.5 billion by FY28 as this real estate TAM and profit pool expands during this period. Now, why is Goldman Sachs liking Astral? That is because of its high exposure to real estate, to CPVC and the home building theme, and they like Prince Pipes because of their shifting focus towards high value products and real estate. Now, as a result, they see a 12% upside in Astral and an 18% upside in Prince Pipes. Back to you.
Wow, that's a big move there. Goldman Sachs talking about an addressable market of $7.5 billion for the pipe industry over the next few years, initiating coverage on Astral with a 2,300 rupee target price. Thanks a lot for that. Well, market expert Himang Jani joins in now to talk about some stocks that are in focus. Himang, hi, good morning and thanks for joining in. You know, I wanted your thoughts first on Avenue Supermarts because good set of numbers coming in. The revenue growth of almost 20%, store addition is up 13%, and this has been a pretty competitive market. Despite that, they're holding steady. What do you do with this stock now?
Good morning, Sonal. Thank you for having me. Clearly, if you look at the business update on most parameters, it is looking quite impressive. And the key takeaway as far as Avenue Supermart is concerned is that the growth in revenue per square feet has seen revival in the last 3 to 4 quarters, with each quarter it's growing by about 4 to 6%. Also, the way the company has gone about expanding the product categories, that has started yielding them good results. And the store expansion drive is very much continuing. So we have a positive view on Avenue Supermart with the price target of almost about 44.90.
Okay, that's on 44.90 you said. Okay, got it. You know, I just wanted your thoughts on this entire pipe industry because my colleague Hormuz was just talking about that Goldman Sachs report which has initiated coverage on various stocks including Astral, and there's a huge underlying demand in the real estate sector. But do you think this entire space has played out or is there more to go, and what would your top picks be here?
So now when you look at the building materials and specifically pipe, I think there is a long way to go given the kind of support that is being given both by the government and the private players. And, key players are very few. So you have maybe Astral, Prince and maybe Phenolex, etc. So I think given the size of the opportunity and, limited corporate players, there is going to be a big runway of growth for some of them. So Astral is something that we have been liking a lot. And we think that, given the positioning that it has and distribution strength, there can be a very good 18-20% kind of a CAGR story over there.
Okay. Hi, Hemang. Good morning and good to see you. And there were a lot of banks and financial institutions that came out with their quarterly updates. Anyone that stood out for you? You had L&T Finance, you had Poonawalla, you have AU Small Finance Bank that's now flashing on the screen. Any of these ones stood out for you?
Still, L&T Finance and Poonawalla both were good. Particularly L&T Finance, if you look at the retail loan growth was 31%. The retail mix also has expanded to almost about 94%. So that is something that we've been liking. Also, Poonawalla continues to report a very strong AUM growth, 54%. And with asset quality being under 1%, the net NPA there is a sense that the company will sustain this kind of a growth across its business vertical. So both the stocks we have a positive outlook.
Hemang, commodities and the move that we are seeing, it may be tactical, but when these moves happen, they are sharp. So metals, there is a bit of a lift which is showing up. Will we see some of that coming through for names like ONGC, etc. as well? And on the oil side, because oil is also now closer to 90 than it has been over the last couple of months.
Seen a bit of a cool off when the mid-March, end March, we had seen the PSU as a sector cooling off. Also the fact that the crude oil price was low at that point. Now we've seen revival oil price, and we do think that the re-rating which has started for some of these oil PSUs may continue, and ONGC still continues to look quite attractive in terms of valuations. There is a good amount of production growth. The pricing, there is going to be a little bit of more comfort because of the way the government has gone about giving them pricing both for crude and gas. So ONGC continues to be one of the better placed companies, particularly in the current environment where crude oil prices are shooting up.
Okay, all right. What about Vedanta? Hemang, that's always a tricky one out there with regard to what the promoter does next. But if you want to play silver, there's only one company that has silver play, a direct silver play out here. That's Hindustan Zinc. The float, though, is very limited over there. Only 2.5% is there in the market because, the promoter as well as Government of India has 95-96% in the company. What's your view on Vedanta? Because if commodities are firing, aluminium, zinc, silver, Vedanta has exposure to all of them, including crude. Your view on the stock, would you take the plunge or would you say, no, I'd rather stay away, I've burnt my hands in the past, I don't want to get into this one?
I think, Nigel, it would be good to have some exposure to Vedanta, though it has run up a bit, because, the way the company has gone about, announcing the demerger, the alumina, the silver and certain base metal prices, the way they've shot up, there's a major capex that the company has undertaken. I think the only negative could be that one of their key personnel who was overseeing this entire, demerger related activity has resigned. So I don't know how the market is going to take it, but purely on the basis of the current base metal pricing and the demerger that the company has announced, there is a positive view on Vedanta, and we think that it is still attractively valued at maybe about 8-9 times price to earning, with a lot of, asset-based re-rating which is in store for them.
Okay, all right. Just stay on, Hemang. We have a company joining us now, so we'll just come to you in a bit. The first management on the show today is Zaggle Prepaid Ocean Services. The stock has surged almost 80% in the last 1 year. The company recently bagged a contract and partnership with multiple companies offering fintech products and expense management solutions. To discuss this and more, we have Avinash Godkhindi, who's the co-promoter, managing director and chief executive officer at Zaggle Prepaid. Avinash, thank you for taking the time out early this morning and speaking to us on CNBC-TV18. Can you tell us, about these several partnerships? First, if you can elaborate on how the partnership with Hyperface aligns with Zaggle's mission, its value proposition, and what does Hyperface really bring to the table in terms of revenue opportunities? What do you see?
See, Hyperface is a great partner, Sonia. Thank you for having me. Appreciate it. Great partner as we build solutions for partner banks on the credit cards side, right? And Hyperface is not a revenue accretive partnership per se, but a product accretive partnership. And together with our solutions around expense management and vendor payments, we are able to augment the solution far better with the capabilities of Hyperface.
So if you can just elaborate a little more on, tell me a little more about Hyperface. And you said it's more like there's no real revenue augmentation, but a product augmentation here. So a little more on that.
So what happens, Sonia, is as a partner for the banks, our role is basically to provide our own software platform, which is expense management, employee benefits, accounts payable. And there are other capabilities that a bank needs in terms of onboarding, in terms of other digital capabilities, which we bring to the table because already Hyperface has built a very robust platform. And we are able to leverage their capabilities around onboarding and other such pieces, which a typical bank would need for their journeys to be seamless.
Avinash, hi, morning. Prashant here. Sort of just pulling back a little bit, and let's talk about the quarter itself, right? Without getting very specific, because I mean, you'd be reporting numbers, etc. Could you tell us how many new clients you've added in the January to March period?
See, Jan to March, we've added quite a few. Overall, we've added 650 plus corporates, Prashant, in the year. And the beauty of the relationships that we've...
Avinash, third quarter, you added 105. Could you tell us, I mean, so in the fourth quarter, what was that number?
It's better than that, Prashant.
Okay, more than better than the third quarter.
Overall, if you look at it, Prashant, the business spend management space is a very, very large emerging space, right? And we are very confident and bullish about how the space is emerging with so many possibilities coming out in just the last 6 to 12 months, whether it's our, impending go live with our fleet solution, with our, credit card offerings, with our Forex solutions that are coming into the market next year.
So could you tell us on the fleet side, which you just started, right? I think you'd mentioned that at the end of the third quarter, fleet loyalty card program, and you'd kind of given some numbers as well. What is the size of the market in India? And you're just scratching the surface there. What is the, how is that ramped up? If you can share some numbers in the fourth quarter on the fleet side.
So the pilot went through successfully, Prashant, in the fourth quarter. The go live was always planned to be, full-fledged go live was always planned to be this year. And so we should see some strong trends with Torrent Gas, who's our partner. And we are also looking at other fleet solution providers in the market to be able to take this solution to them as well.
Okay, all right. Avinash is sounding fairly optimistic about business. What does this mean in terms of a trajectory? For FY25, what kind of a growth can you give us on whatever you report in FY24? Those numbers we'll know in a bit. So, but since you're in silent period, I don't need to comment on the near term. On whatever base you deliver in FY24, what is the growth? And also, how does your margin trajectory improve from here?
So on the growth side, we've already given a guidance of 40% plus growth for FY25, and we may revise it further. So we are very bullish about our prospects this year and the coming years as well, right? Margin, we've given a guidance of adjusted EBITDA of 10 to 11%, and we'll be able to achieve that. And so overall, we see, great tailwinds for our business as we go into the new year.
Was it, Avinash, 11 to 30? The number I have is 11 to 13% EBITDA margins. Or is that the
adjusted EBITDA margins? Yes.
Adjusted.
Okay. And revenue growth, that was 40 to 50%, roughly.
40 to 50% last year, which we achieved. And this year, we will be 40% plus is what we've given as a guidance. And we may revise it further.
Okay, you have an agreement with Visa as well. How has that done for you? And what is the kind of momentum you've seen in the last 6 months?
See, the Visa agreement has worked out brilliantly, and we're seeing a lot of traction overall with Visa. We also have started to work a lot with the other, network providers like RuPay and MasterCard. Overall, Sonia, if the business grows, right, and if the quantum of spends that we are seeing through our platform grow so significantly, then we are able to keep all the networks happy. Ultimately, banks and networks require volume spends and high quality spends, and that we are able to provide to them.
And, the Ease My Trip partnership that you have, can you tell us a little more? The last time you told us that is doing pretty well. Any more such partnerships in these spaces? Because, these are spaces which are booming at the moment. So any more opportunities that you see here?
Oh, yes. We've signed up with RIA as well, RIA Travels, Tours and Travels. And that's an API integration that's also, underway. Ease My Trip is a great partnership. We already work with Yatra, who's a very strong partner of ours. So we are looking to offer a whole slew of travel options to our corporate customers and their employees through our expense management solution. When a corporate makes the booking of travel, they want choices. And through these sort of partnerships, we are able to provide those choices seamlessly through our self-booking tool.
But is there any opportunity to sort of do better margins because of these these several relationships? Because you've said your EBITDA margins will remain in the range of 11 to 13%. But is there scope over the next few years to move out of that range on the upside?
Absolutely, Sonia, because if you look at these partnerships like Ease My Trip and Ria, for every booking that we bring to their platform, we earn a commission, right? There's a rev share. So the whole idea is if you're bringing business to our partners, we would like to monetize on that. And similarly, if they bring in a corporate customer for us, we do a rev share with them as well. So it's a win-win. And these are opportunities which we are looking at across board to monetize. Once you have a large pool of spends, if you're directing it in different directions to different merchants or travel partners, you're able to monetize on that redirection or that ability to move spends for them. So you're able to monetize on that. Absolutely.
All right, Ganesh, we'll leave it there. Good speaking with you, and hope to speak with you after your earnings, which should be out shortly as well. Thanks very much for joining us here on CNBC TV18. Well, that Zaggle stock's done phenomenally well. It's come off the highs, of course, in the recent correction, but it's already making its way back up. We'll take a quick commercial break here, but as we do that, just wanted to point out something that you should not miss. CNBC TV18 is presenting India Exchange, an event where market experts and industry stalwarts will collaborate in insightful discussions on India's economic path and evolving dynamics of the Indian market. Mapping the macros with City India economist Samiran Chakrabarti. Catch a jugalbandi between market masters Manish Chokani and Ramdev Agarwal, and return of animal spirits within India Inc. A conversation with V. Vaidyanathan of IDFC First, KK Mistry and Manish Kejriwal of Kedara Capital. Chasing Alpha with market experts Nilesh Shah, Prashant Khemka and Anish Tawakle. Don't miss out on all of this. Tune into CNBC TV18 today evening, 5:30 p.m. onwards. Welcome back. There's 11 minutes to go for the pre-open session. Anuj is standing by with a quick trade setup. Anuj, morning.
Morning, Prashant. We discussed yesterday that, the gap down could be a good buying opportunity, and the market yesterday actually passed a big test that it's now ready to move to all-time high and maybe sustain above that. Maybe even today itself, who knows? The market is still very light despite being near record highs, and FIs are still shorting this market. The March correction made mid-cap especially lighter, and it looks like the Nifty, as I said, is ready for life about 22,500. Also, what's important is the market's now focusing squarely on domestic cues, and they look quite strong. Weak global cues have stopped impacting our markets. DI money driving the market, that's also good news. And today, even global cues are supportive. Only Brent crude remains something which is a bit elevated. My sense is that Bank Nifty could lead the market as it's done for the last 2-3 days. Expiry is out of the way now. Policy is tomorrow. So there could be a clean day for Bank Nifty today. Q3 updates have started. You saw HDFC Bank's update, for example. Most domestic companies have shown very strong numbers. L&T Finance, Poonawalla, DMart came out with really strong numbers. So you want to stay focused on domestic economy companies. On the Nifty, the only resistance now is 22,500 to 22,533, the all-time high. And based on the options data, 22,500 call has the highest open interest. So that's why. And then above 22,530, there's blue sky territory. Support on the downside, 22,325 to 22,354, yesterday's low and put option base, and 22,190 to 22,280, 10 and 20-day exponential moving average. The Bank Nifty, of course, as I said, is the strongest component for last 2 days, is closing at the highest point of the day. Expiry is out of the way now, and the next resistance is 47,800 to 48,000. And then, of course, you'll have 48,500 to 48,650, which is the all-time high zone. As always, I leave you with the quote of the day. It's a bit of a bittersweet today. For our generation, perhaps the greatest all-time best acting performance in The Dark Knight from Heath Ledger. It's his birthday today. And his quote was, "I don't know what I'm doing tomorrow. I completely live in the now, not in the past, not in the future." A quote which, sometimes makes me teary, especially given the kind of actor he was. But that's a very important message. Live in the today.
Okay, living in the moment, right? That's the only thing that we can learn from all our lessons in life. Thanks a lot, Anuj, for that. And thanks for always enlightening us both on the market and the finer things in life. Well, let's move on and talk about how to approach the markets today. Mitesh Thakkar, Sudarshan Sukhani join in. Sudarshan, hi, good morning. It is looking like it's not a bad state at all. In fact, very stable despite all the global volatility. How are you approaching the markets today? We have a big event tomorrow, which is the RBI policy. We have the US jobs data as well. Do you think this volatility is something that could continue?
Yeah, good morning. Well, yesterday was a day when trading was not necessarily to be done, and that's behind us. All the signs are now suggesting that the Nifty is ripe for lifetime new highs. We've had a small correction. That correction was bought into. That, of course, is the first sign. The markets appear to be opening on a cheerful note, and we are on the verge of breaking that 22,500 resistance. Once that is broken, then we are in uncharted territory, which is always a good place to be for the bulls. So buy the Nifty and the Bank Nifty, and if you already own these instruments, which you should be, if you're a positional trader, then stay long. You just move your stops, shift your stops to 22,300, and with that, ride this uptrend which is expected and imminent.
Okay, all right. Sounding quite bullish then, Sudarshan. Thanks for that. Well, Mitesh, let's come across to you. What's your view? You know, the last couple of days, if you got a dip, you bought it intraday, you'd make some money. What's your view right now?
Good morning, Nigel. I've been positive on the markets, and I think we had a similar call yesterday that decline should be used to buy into the markets, the gap down which happened yesterday. But I think what I'm looking at is now a decisive break beyond 22,520, 530. I think that level, once it's crossed on the spot Nifty, then I think you will get a very neat and clean breakout with no historical supply pivots, and that could be very, very positive. So the idea is that today's gap up, we might open closer to about 22,500. You might want to take some profits on long positions and see if there's strength beyond 22,530. Otherwise, wait for that dip, which is closer to 22,300, 350 zones. You will get a de-entry. So that's the way we'll approach it. But yeah, the idea is to trade on the long side, and on stock basis, the breadth is very active, and we have been clearly trading with long buys.
What about individual stocks? What are we looking at this morning, Amitesh?
Yeah. So I have an all-buy list, just like for many days, last few days, that the bias is clearly on the buy side, despite the fact that you will get some negative clues also once in a while. But today is an all-buy list. A couple of banking names. Punjab National Bank was a call yesterday as well. A good breakout beyond the earlier swing highs. So buy here with a stop at 130 for targets of 145. AU Bank, once it crosses 610, it's trading very close to that. Buy then with a stop at 595 for targets of 645. A buy on Aurobindo Pharma with a stop below 1114 for targets of 1180. And Chambal Fertilizers is a buy with a stop at 368 for targets of 390.
All right, Sudarshan, what about you?
Well, it's also, for me, it's an all-buy list, and there are two reasons. It's not just a Nifty which is upbeat. There are any number of individual stocks which are again giving buying signals. So that tells us that at least a lot of stocks are not willing to go down. We start with Bandhan Bank, which is probably ending its deep correction. Buy with a stop under 180. Coal India, buy with a stop under 435, a resumption of the uptrend. LIC Housing, buy with a stop under 630, again a small correction and resumption. And finally, NMDC, buy with a stop under 212, a deep correction and now a resumption.
All right. Lots and lots of stocks, as both Mitesh and Sudarshan are saying, are moving up and showing encouraging signals, encouraging signs. So it's a very, very vibrant market. That much is absolutely sure. Gentlemen, thanks very much. We'll come back with more ideas at 9:10. But we'll take a break for now. The pre-open session with us in just a bit. Aditya Khemka, a fund manager at Incred Healthcare Portfolio PMS, will be joining us to put the spotlight in the pharmaceuticals space. Stocks saw a bit of a lift yesterday. Stay with us.
All right, welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio. Well, we are going to talk about the F&O markets now. Chandan Taparia joins in. He's the analyst at Motilal Oswal Financial Services. Chandan, hi, good morning. What do you think the trajectory of this market could be over the next couple of weeks? Because, you know, we are seeing a lot of volatility. And particularly for today, what should the best strategy be, both on the index as well as on individual stocks?
Good morning, Sonia, Prashant and Nigel. Thanks for having me. So major trend of the index is positive, and we have noticed that every small decline is being bought. We managed to hold the higher base in the market from last couple of weeks back, and now the base is shifting higher. And looking at the India VIX, that is continuously falling down, and VIX is now below 12 marks, which is at lowest level of last 6 weeks. And recently it corrected from 16.7 to 11.31 level. So falling volatility clearly indicates that bulls are holding the grip and they are having dominance to ride the next leg of rally. Even if I look at the put call ratio, the immediate put writing is clearly visible, which indicates that market is all set for the new lifetime high. So looking at the entire data internal, we believe that 22,222 could act as a major support to drive the rally to us 22,750 zone. And for intraday point of view, we can follow the support near 22,350 for a bounce to us 22,529 to 22,550 zone. Now looking at the Bank Nifty index, we believe that Bank Nifty now could start some leadership. Selective banking name could start the momentum to drive the next leg of rally. It is holding the base along with put writing activities. Yesterday, we have noticed that Bank Nifty closed near its highest part and given the recent highest daily close. So expecting fresh leg of rally. So one can buy on any small dip with support of 47.20 and expecting Bank Nifty to head towards 48.20 kind of levels. Now talking about the stock specific, when we talk about the Bank Nifty, we have positive on the selective PSU name as well, including Canara Bank, PNB, SBI. And here we would like to recommend on the Canara Bank. The stock is holding well above its 50-day exponential moving average from last couple of months. It has given a consolidation breakout on daily and weekly frame. We have seen build-up of long position. Put writing is clearly visible. The stock is entering into the new lifetime high territory. So recommending to buy with support of 595. And Canara Bank has potential to move towards 640 level. Second trading idea, that is buy on Indian Hotel, one of our preferred name. Technically, it has given a pole and flag breakout on the weekly chart and given a consolidation breakout, making high-rise high lows from last 6 trading session. Overall longs are intact in the counter. So one can buy with support of 603. And here we have a target towards 645. Last trading idea, that is buy on Voltas, one of the strongest counter, making higher tops, higher bottom on the weekly, daily and the monthly scale. Major setup is positive, which could continue its momentum. So one can buy with support of 1200. And here we have target to us 1270 levels.
Okay, all right. Thanks a lot for that, Chandan. Wishing you a good session ahead. By the way, bottom of your screen, Japanese media is saying that there was a magnitude 6 earthquake that hit the coast of Japan. So that's some news that's coming in there. Prayers to all of them out there. But there's no tsunami threat from the recent earthquake. So that's some solace that's coming in there. Well, let's get back to the markets then. And Abhishek joins us to tell us what's on his Momentumizer list for the day. Abhishek.
Well, the momentum as a stock of the day is clearly AU Small Finance Bank that I have on my radar. The stock has outperformed both Nifty as well as Bank Nifty over the last 1 week or 1 month as well. So you need to check into that account that they have actually outperformed both Nifty and Bank Nifty over the last 1 month as well as last 1 week. Weekly change, if you see, it's gained 8.2% versus Nifty gain of 1.4% and Bank Nifty gain of 1.8%. Monthly gain is about 5% versus 0.25% gain for Nifty and Bank Nifty gain of 0.7%. Now, volume data, yesterday's volume was about 657 crore, which is the highest after 29th of Jan 2024. So, yesterday's delivery volume was about 52.9%. If you take a look at the technical levels, the stock closed at 607.45 yesterday, and yesterday it crossed the 50 DMA. So, that's on radar with respect to Momentumizer. Back to you.
All right, thanks a lot for that. So that is the Momentumizer stock of the day, but we still have market expert Hemang Jani with us. So let's get talking to him about a couple of other stocks. Hemang, you know, I wanted to chat with you about some of these auto names because what we are noticing is that there is a big slowdown underway in the electric vehicle space, especially after what Tesla announced a couple of days ago with a steep fall of 9% in their sales in Q1. And even back home, EV penetration has been very low, whether you talk about passenger vehicles or even two-wheelers. What do you do with some of these names like, say, an M&M, a Tata Motors, a TVS Motor?
Sonia, I think the monthly numbers that we had seen were not that encouraging, barring maybe one or two names. And as far as EV is concerned, I think very early days, and the policy announcement has just happened, and we really have to see what kind of investment, what kind of companies we get. But overall, purely from a technical point of view, with quarterly numbers in mind, we do think that names like Mahindra, Tata Motors, and some extent Hero Motors should report reasonably good set of numbers given the monthly run rate which was there, and on the margin side also we will have certain degree of stability because the metal prices have started shooting up only now. So purely from quarterly perspective, I think these are the two or three names that we are positive.
Okay, well, that's the view coming in on the auto names as things stand right now. But we have the pharma sector that we want to put the focus on. Aditya Khemka is fund manager at Incred Healthcare Portfolio PMS. He's joining us right now to take some questions. Before I get to pharma, Aditya, good morning. Thanks very much, Prashant this side. I just want to get a quick word in on hospitals, something we've discussed in the past as well. It gave you an opportunity, didn't it? Gave all of us an opportunity with that correction. Maybe that opportunity is still there, but stocks have come up nicely. Looking at Narayana, Max, and a few others as well. From the recent lows after the the court coming in and saying, telling the center to standardize procedure rates, etc. There's no resolution, but it's kind of pushed onto the back burner now. And business fundamentals are back in focus. Just wanted your thoughts there, and what's your pick?
Yeah, so if you see the court hearing, I think the court hearing is scheduled for 10th of April, where the hospital industry is gonna discuss this issue with the court and basically try to justify to them that standardizing procedure rates just doesn't make sense because the cost structures are so very different for each hospital unit. So if you have to do standardized pricing, you have to sort of take the cost structures of each and individual hospital into account before you can think about what kind of rates they should charge. So I think that is where the main debate is going to be between the industry and the court, and we will see what the outcome is. From our perspective, we believe that most of the hospital stocks are still fairly overvalued. Yes, they did bounce back, but I think if you look at the historical valuation and the valuations of hospitals in the regions, countries like Taiwan, Brazil, Thailand, Russia, Indian hospitals are far too expensive. Majority of them, not all of them. And hence, I think the hospital sector will see some price correction or time correction over the next 1 or 2 years. And then maybe we'll have an opportunity to invest more in hospitals. From our portfolio standpoint, we just hold one hospital, that is Healthcare Global. And we hold it simply because it offers a better risk reward than most other listed hospitals do.
Okay, all right, got it.
Okay, so that's the view on hospitals as things right. By the way, your pick in the space is which one, Aditya?
Healthcare Global.
Healthcare Global. By the way, the deal there is happening, right? The deal, Aditya?
Yeah. So
is it your call predicated on the deal?
Not really. It is a profitable hospital chain. It's a hospital chain that has generated free cash flow for the last decade, every year for the last. And I think it is undervalued. So if the deal happens, we'll probably get a price uptake, which will be a cherry on the cake.
And do you think one of the list? By the way, we've had hospitals come on the show and we've asked them whether they're interested. Obviously, no one really committed to an answer one way or the other. But do you think this will go to one of the sort of listed entities? Any thoughts at all?
So look, it will make a lot of sense for one of the listed entities to buy hospitals. Oncology being a space where most of the listed entities have struggled to build a sizable presence and where most of them want to build a sizable presence. Hence, it will just make sense for one of the listed entities to pick it up. But again, it totally depends on how negotiations go, how due diligence goes, and what kind of valuations they are willing to offer, and what kind of valuations the exiting PE firm is willing to accept.
I wanted your thoughts on diagnostics, because the one thing that is working in the diagnostics company's favor is valuations, right? Compared to historic valuations, the stocks are trading at very cheap valuations right now. Do you think a case can be built for buying some of these companies?
No, absolutely. I think one of the pockets of healthcare where we are most bullish is diagnostics. The simple reason being that the stocks are fairly below their historical averages in terms of valuations, BTV, EBITDA, PE multiples. And there's a significant recovery we are seeing in the sector happening for the past 4-5 quarters. I think the broader investors have just neglected this because they have been disappointed post-COVID, the revenue declines that happened in the sector. But in our view, that was always expected. COVID revenues are never going to be perennial revenues. As well as if you look at the last 12 months, for diagnostic sector was not good because it was a bad acute season in India. And hence the volume growth for the diagnostic companies was not to the level it generally is, because in India, we generally see a strong acute season. So this year, we expect the acute season to be normal, which means YOY growth in terms of volumes will be great for diagnostic companies. And hopefully that will reflect in stock prices.
All right. Hi, Aditya. Good to see you. What about the pharma pack? Where do you see opportunities out there?
So within the pharma pack, unbranded generics, which is your US, European business, generic business, we don't have a very bullish stance. We feel that most of these companies are benefiting from one-off cash flows, one-off product opportunities, which may be 2-3 years, or maybe in some cases 6-month cash flow also. And that's getting a full PE multiple. And hence, these stocks should probably correct in the next 2 to 3 years. It might be time correction, absolute correction. Is that difficult to say? On the branded generic side, we remain optimistic, we remain bullish because the secular growth in the Indian market will continue. And again, the acute season this year should drive volume growth over the low base of last year. So that should reflect in valuations this year as well. On the API side, we are not so bullish on the generic unbranded API because there again, the competition is high, pricing is bad, and we don't see a significant return on capital happening in those companies. On the custom synthesis API side, we are very bullish because we see the China Plus One playing out. We are seeing more and enough evidence of the global pharma majors trying to diversify away from their reliance on China, and India being the second most favored destination. We feel that there's a lot of scope for these API companies in custom synthesis.
All right, we'll let you go on that note, Aditya. Thanks a lot for joining in. Appreciate your time here. By the way, the market looks like it's going to have a very big opening this morning. The Nifty is up 157 points in pre-opening, and there's plenty of action actually, even in the broader market. So it's just flying away. 22,590 is what we're looking at. Now, in terms of individual stocks, the space to be in this morning could be, Hindalco, of course, is your big mover, up 2.5%. HDFC Bank, after its update, is up almost 1.5%. Tata Consumer, Tata Steel, Kotak Mahindra Bank. So banks look like they could really charge ahead. Sudarshan Sukhani is back with us. Sudarshan, all right, we'll go to Mitesh actually. Mitesh, what's the big call at 9:10?
I think you kind of highlighted the sector. Banks could do very well, and we had a lot of PSU banks give a breakout yesterday. I had PNB as one of the buy calls today morning. I think that's the stock which I'll go with. Buy for a target of 145.
All right, thanks for that. HDFC Bank is actually topping the chart. So let's hop across to Abhishek to find out more. Abhishek, over to you.
Well, Sonia, the deposit growth that they have seen in Q4 is massive in absolute value. Despite the liquidity tightness condition that we are seeing with respect to in the system, the deposit growth is of 1.66 lakh crore on a sequential basis. Last year, same quarter, they did 1.5 lakh crore when the liquidity conditions were good in the system. So deposit growth is massive at about 7.5% quarter on quarter. I'm not taking YOY comparison because HDFC Limited got merged in the, this year. So CASA has actually improved. CASA ratio is up to 38.2% when compared to 37.74% in the previous quarter. Retail deposits are up nearly 7% sequentially. Now the advances growth is at 1.6% quarter on quarter. Domestic retail advances have grown by 3.7% while commercial and rural banking have grown by 4.2%. What's impacted the advances growth is the other wholesale loans which have actually declined by 2.2% quarter on quarter. So CD ratio or credit deposit ratio has declined to 105.4% when compared to 111.5%. So the deposit growth actually gets a thumbs up. Back to you.
Okay, and that has been the worry, right, Abhishek? Deposit growth not picking up. So that is coming in stronger and healthy. So we'll watch out for that one. And that's an index heavyweight as well. So we'll have an impact. Now, IT is the other area. IT stocks did well yesterday. JP Morgan has got a note out. Rima is here with details. Rima.
Hi, so they've titled their note is how do you make money in IT from here on with recovery pushed out to the second half of the fiscal year. So they've got 3 upgrades. They've upgraded a persistent systems to an overweight with a target price of 4,400. They've upgraded LTIMindtree to a neutral and an upgrade on KPIT Technology to a neutral. Now, the reason for the upgrade on LTIMindtree is the recent underperformance. They say since the Q3 earnings, LTIMindtree is down 22%, versus the Nifty IT being down 5% and the Nifty itself up 4%. So LTIMindtree has underperformed. So that's the reason for the upgrade on LTIMindtree. For persistent systems, the reason for the upgrade to an overweight is the earnings upgrade. So they've raised their FY26 revenues by 2%, margin estimates by 40 basis points, driving a 5% earnings upgrade. And the reason for the upgrade on KPIT Technology has been the strong deal wins. JPM says the company has 3 large deals in the pipeline which should get closed in FY25, which will drive a 20% growth in FY25 and FY26. Now, a quick word on what they expect from the quarter gone by. They're saying the market should largely ignore a soft Q4. It's done and dusted, right? FY24-5 guidance of revenue on Infy and HCL Tech could negatively surprise the street. If Infy comes out with a 2 to 4% kind of a number, HCL Tech guides for 4 to 6%. But JPM believes the underperformance that we've seen from NSE IT over the last 1 month could keep absolute downsides limited from here on, and that's crucial. Back to you.
Okay, remember yesterday CLSA upgraded the tech stocks as well, Tech Mahindra, TCS and HCL Tech. So yesterday CLSA and today JP Morgan.
Right, well, back to back, right? The first trades are coming up on your screen, and I think we've got, has to be record highs, right? I mean, the prices will come up on your screen. We are starting at, new highs. 22,554 is what the start is at, 120 points higher. The previous was 22,530-ish and a few points. But this is a new high, a new record high coming through. 0.5% is what that translates into. The Nifty Bank, by the way, is up 0.8%. I saw 48,000 around on the Nifty Bank. Mid-cap index is starting strong. I mean, the strongest of the lot. I mean, 0.6, 0.65%. And I think the small cap index should also be in the green. Lots and lots of stocks to talk about. Sonia has got the rates. Sonia.
Oh, absolutely. It's a very good start for the market. Just look at that. The Nifty is now up almost 0.5% at the 22,560 mark. And the mid-cap index, as we've been telling you, is sitting at a record high. Let's go straight to individual stocks now. You have HDFC Bank, which is reacting to their numbers, the business update that has come through. And in pre-opening as well, HDFC Bank was up. Look at that, 2% higher now on HDFC Bank. Angel One. The client base was very strong in quarter 4, up 61% year on year and 14% quarter on quarter. So the street is reacting to that. However, the gross client acquisition has slowed down a bit. Avenue Supermarts is the other one. Very strong business update. Standalone revenue growth of almost 20%. Store addition is up almost about 12.5%. So looking very strong there. L&T Finance. Strong retail disbursement growth of 33% year on year. L&T Finance is up about 2%. RBL Bank, the deposit growth is the highest that we've seen in the last 12 quarters. So 3% up move on RBL Bank. A couple of these pipe companies are in focus. Astral is what I'm looking at this morning as Goldman Sachs has initiated coverage with a 2,300 target price on Astral. They are very bullish on that space. Then you have Poonawalla FinCorp, which has given a very strong quarter 4 disbursement growth. AU Small Finance Bank, the deposit growth is up 26%, so looking pretty good over there. Look at the stock now up almost 3%. And IEX as well, the total volume growth has been in single digits, up about 6.2%. I also want to just take a quick look at some of the tech stocks that JP Morgan has upgraded. Rima was telling us about an upgrade on persistent systems on LTIMindtree as well as on KPIT Tech. So these 3 stocks could be in focus. Remember, yesterday CLSA upgraded the large cap tech stocks as well. So Nifty IT perhaps could play leadership in the next couple of days. Back to you.
Well, thanks a lot for that, Sonia. Well, keep an eye out on Vedanta. That's the stock that I highlighted earlier today. If you want to play metals, there is a promoter risk. There is valuation support, though. Vedanta is up close to around 4.5%. It has exposure to aluminium, silver, zinc. Silver, in fact, will be via Hindustan Zinc. So that stock as well is up close to 2%. But the volume is very, very, limited out there owing to the limited free float. So that stock is up 2.5%. SCI Land. Now, that stock is up close to around 10%. I recall the stock being in a 5% band. I'm not sure whether or not that's got flexed. But that could be the reason why that stock, in fact, is up close to around 12% as we speak. Big up move is what we're seeing out there. Ujjivan Small Finance Bank up close to 3.5%. Bank of India as well is piling on the gains in there. That stock, in fact, is up close to around 3.5%. RBL, as Sonia mentioned, well, that stock as well is doing pretty well. But it's a lot about commodities as well, because you have a few more stocks. Nalco, on Monday, we highlighted that could be the stock to watch. The stock was at around 150 rupees. It has the tailwind with regard to aluminium production, alumina production, aluminium prices, and also they're going to get the benefit of getting captive coal. And the stock is up close to around 20% in this week itself. It was at around 150. Now it's at around 180 odd. So good going on them. Oil India is seeing some pullback. The stock is down 1.5%, and India Mart as well. But Prashant, a good looking screen. When your biggest weight in there, that's HDFC Bank, starts off in the green. It's supported by the tech names. Well, it's a recipe for a good day.
Absolutely. And, we climbed over the 22,600 mark on the Nifty today as well, right? For the first time. So lots of records, of course, falling along the way. 145 on the Nifty is what we have. Just the one name is just a big move, right? KEC, if you can have that up. It's the second biggest volume-led gainer. I think we highlighted that they've received orders, some 800 crores worth of orders. And we'll try and have the company join us. But there's a large name with an 8% pop, and look at the volumes there coming through as well. What else? Tata Investment Corp, I mean, some of the usual suspects, right? 5% higher. Irida, by the way, is up 5%. It's got massive volumes. It's actually the number one volume-led gainer right now. There is Webull Solar, which is up 5%. Yes, some of these names have seen vertical moves over the last couple of years. Webull is one of them. There is... JP Power, which is up 5% out of the blue, right? I mean, no real small name now, but it's seeing some action. So I'm just trying to spot things with volumes. Cochin Ship, so Mazgaon, Cochin, Garden Reach, all these shipbuilders saw big 5-7% moves yesterday. They're all coming off a little bit. All three of them. Mazgaon is down 1, Cochin is down 1 1/3, and Garden Reach is down about 1%. We've got Apollo Hospitals, which is, but nothing, no real big price change. India Mart is down about 1%. Aurobindo Pharma is down 1%. There's something like a Gulf Oil, which is down about 0.75%. All in all, it's a pretty healthy screen out there.
I just want to spend a little bit of time zooming out, right? We always talk about the here and the now, but today the market is once again at fresh record highs.
Yeah.
And, my colleague Hormuz very helpfully tells us that from the COVID low of 7,500, the Nifty has already tripled. So from the 2020 low, the Nifty has already tripled, and hence, the popular adage, right? Always buy when the market is fearful, be greedy when the market is fearful, and that would have played out for you very well. By the way, the mid-cap index is also at a fresh record high. So all of those stocks that we had a couple of weeks ago about big, capitulation in the mid-cap index, none of that has played out. The market has climbed every wall of worry.
Well, March 24th, 2020, that was the day we went down to 7,511. But as they say, if hindsight was foresight, well, everyone would be millionaires, right?
Well, Dheeraj Agarwal is now joining us. He's Managing Director, Ambit Investment Managers. Dheeraj, great to have you with us here.
Good morning.
Appreciate it. So how are things looking? Should I be asking that question? It's absolutely fine, right?
Yeah,
how will they look is the question from here on.
Things are looking fine. I think March volatility was a little torrid, as you mentioned on the show a little while ago, that mid-March, quite a large number of names which were the best performers going into March, last 6 or 8 months, took a bit of a knock, right? So mid-caps and PSUs all suddenly fell 15-20% in a span of 7, 8, 9 days, and mid-caps maybe 3 or 4 weeks. All of them seems to have clawed back. So two things are helping the market sentiment in the near term. There is a clear dovish tilt by the Fed in the March 20th meeting. Although they keep on going a little bit back and forth in the subsequent statements. But I think on the whole, the tilt is dovish. And second, our strategist was telling us that most 2 months or 3 months going into elections, the markets have been strong because the optimism starts to creep in what the new government will do, things they could not do in the previous term.
We'll get manifestos shortly. I think next week we'll get the manifestos, right?
Yeah.
People will pore over them.
Correct.
Hopefully they'll be well detailed on the economic front.
Correct.
So that should act as a trigger.
Yeah, that could act as a trigger. And optimism is building up that number of unfinished agendas of the last term could get completed in the next term, etc. This always happens. So, we could see a near-term bit of a move. Medium-term, I think the markets will continue to be choppy. That's my view.
Okay, so near-term, you could see a move. But we're getting a lot of questions from viewers, from investors about what happens post the elections, right? Because if this is a build-up to the elections, and once that whole election trigger plays out, then do we normalize to sort of, I mean, are we getting into sort of a time-wise correction for the market? Is it going to be a period of no growth at all? How do we approach it throughout this calendar year?
So throughout this calendar year, I've been of the view the markets, but I call it non-linear. So we saw sort of a linear markets over the last 12 months. Very small pullbacks and markets kept on rallying. This year, I think markets will be non-linear. So you'll see a lot of ups and downs through the year. For the whole year, I wouldn't be surprised if we close the year in a plus minus 5% range and not a huge return the way we saw last year. The reason for that is if you see the earnings performance of the large caps, there's a lot of dispersion trend. So capex-oriented or investment-oriented businesses are still doing okay, but they're slightly richly valued. Consumption weakness, which started with only rural weakness a quarter or 2 quarters ago, now seems to be percolating upwards even to the urban products and demand. That's a little bit of a worry. So there are cycles and then there are counter cycles which is happening, which in my view is a little bit of a risk for earnings going forward. And the margin benefit which the company's got because of sharp fall in WPI will start to fade away soon.
You know, I was just wondering, some of these commodity prices are moving up. What's going to happen to some of those, you know, say those wire makers, those cables companies? You know, suddenly you'll start factoring in that, hey, commodity prices are going up, and that's what's going to hurt the margin. So let's see how that goes. But since we were on the topic of elections, and I think that you were in the camp that's like two-wheelers, you know, what are the other themes you look to play? Staples have been big underperformers. We had a note coming in from Motilal Oswal who said they rather look at staples now in comparison to discretionary, where discretionary actually has been the big outperformer. But they believe the time has come to look at staples. Your take?
I continue to be slightly negative on staples.
Okay. And the two-wheeler theme you still like?
Two-wheeler theme I liked, but from the current prices and the current valuations, I'm slightly more cautious.
Okay.
The stocks have done phenomenal run. For example, Bajaj has done almost 50% kind of a run over the last 5 or 6 months. Hero has done beautifully. So has TVS. So there's also how, I mean, market these days tend to price in year and a half or 2 years of outlook within months, right?
Yeah.
So it is the second thing which I've been continuously saying, and I've, I think mentioned this a couple of times on your show, is it's a very retail-driven market.
Yeah.
So 2 things are happening. One, near-term earnings triggers get immediately priced in. Second, there is a huge amount of weightage on growth over everything else. So, you know, the whole valuation framework of the market keeps on moving. 2014 to 620, all of us moved to just DCF, and we started talking about terminal value and what's the long-term value in the particular business or stock. I think we have done a full round trip and gone back to 90s, which is plain and simple PEG. What is the growth and what is the PE relative to that growth? So, which is why when slight amount of growth disappointments, you see sharp pullbacks in the stock prices as well. One is the business. Second is I would keep an eye on what the valuation respective to the growth is.
You know, retail is driving the stock market, but the government is driving some of the policy-led initiatives, right, which is leading outperformance in sectors, infrastructure, capital goods, railways, metros, defense, etc., etc. You said unfinished agenda, market will focus on. Very quickly, we'll get to know what's in the manifestos, etc. But to your mind, I mean, at the team at you know, Ambit, what's happening? What's the view like? Which are the sectors where this unfinished business will find most resonance in?
I think in terms of sectors and specific push with respect to either the capex plan or PLI, the government has already done a fantastic job. What I would like to see, I don't know whether this will happen or not. What I would like to see, what I would like to see is the.
We all have our wish list. Go for
it. So the labor reforms, which was attempted but pulled out, comes back on the table with the new mandate.
The naval labor reforms. Sorry,
labor reforms which are tabled and sort of pulled back. Some structural changes on the agriculture side, which was also tabled and pulled back in the previous term. I hope some of it comes back because it's time we do touch some of these holy cows in the country, and same for land acquisition. So the next big thrust India requires is manufacturing. There's a lot of articles and strategy reports being written on why, despite the economy doing well and GDP growth being strong, unemployment problem is still not fully solved,
So you
and
need
that can be
jobs.
solved.
There is just one thing. The interim budget which came, right? Look at the allocations made there across railways, across roads, etc. Many of these areas, allocations actually, the growth in allocations has slowed down materially.
Correct.
And that's the reason many economists pointed out that there's only so much the government can do.
Correct.
Right? There's absorptive capacity of the economy as well. You can't just keep putting in money into these sectors. That will not change even as they come back. So what does that mean for, as a theme is great, capital goods and PLI, etc. But you're reaching limits in terms of how much more the government can do. It's the private sector then.
Yeah.
Will that show up in that way in stocks as well? That maybe they take a back seat. That remains the focus, but the government is kind of taking a back seat as they've told us, and that perhaps will not change when the full budget also comes.
Not necessarily, because see, many of these companies have notched up order book. So book-to-bill ratio is reaching 3.5, 4.5 times, right? I'll just give an example of BHEL from 2003 to 7 or 2004 to 7, just to illustrate my point. So bulk of the order book for BHEL actually came pre-2004. But bulk of the execution happened between 4 to 7. And while generally it is believed that capital goods companies perform only when the orders come in and not when the earnings are delivered, it's not really so. So capital goods start to perform when the orders start to come in. But if the earnings growth is also very strong, the performance continues. So over 4 to 7, BHEL delivered on the projects, executed, and in power projects, typically the last 2 years is when most of the margins also get booked. So as the projects come for completion, the margins also see a bump up. And it was one of the best performing stocks of that time period. So same thing can happen here. Fresh order intake might slow down, but book to bill is 4 times, 4.5 times in many of these cases. As they get executed, and towards the second half of execution is where bulk of the margins get booked. Earnings growth can still stay robust.
Okay, by the way, the stock of the moment is Avenue Supermart. Just look at that, 5.5% rally now on that stock, and big volumes coming through as well on Avenue Supermarts this morning. The market cap has now exceeded over 3 lakh crores for Avenue Supermarts. It has come back in a big way. It just talks about how perhaps consumption has come back, right? But just trying to get your view on this entire sector. How do you pick and choose in terms of both valuation as well as growth now?
So, 2 or 3 things. One is, one of the biggest trend in the consumption sector is formalization. That trend started in, let's say, 2017 or 18, gathered pace post 2020, 21. So there are a few spaces, and Avenue is a classic example of that, right? So there are a few spaces within the consumption space where even if the headline growth is a little slower, some of the stronger names in the sector can continue to grow at a very fast clip, because informal is still a large part of the pie as compared to the formal. So grocery retail is one such example where informal is still a small fraction, and hence the more organized retail in grocery has a very long runway of growth, which is what Avenue is benefiting from. The growth had slowed down a bit, a small sign of a pickup in the last 2 quarters, and the stock's been doing very well. There are a few spaces. Jewelry is another such example, where still the unorganized has a large section of the whole pie, and hence the organized can...
So at this price and at these valuations, you're still comfortable with names like Avenue?
I'm not commenting on the specific stock price move here, but I think that's you asked me a question on what the framework one should use. The framework I think one should use is, if there is still large informal to formal shift happening, at least one can take a bet on a longer runway for growth. And then, valuations is another matter. You have to link it to that.
All right, Dheeraj, appreciate you coming down to the studio and sharing all those thoughts with us. Wishing you a good day ahead, and look forward to having a chat with you rather soon.
Sure, thank you.
Well, let's focus on another company then, BEML. Well, that could be, that is a big Make in India theme, and also it has exposure to various segments, whether it's metros, railways, defense. All those segments are flourishing, and the company will be at the center of it. Well, to understand more about how business is shaping up, we're joined by Mr. Shantanu Roy, the CMD of the company. Hi, Mr. Roy, good morning, and always good to speak to you. Well, let's get the basics out of the way. You've won some orders in the last quarter. So give us an updated order book and break it up segment-wise as well.
Very good morning, Nigel. We definitely have won some orders in the last quarter as well as the last financial year. And the new financial year is again a new beginning for us. Unfortunately, I cannot talk about the present order book that we have since we are in the silent period now. But I can give you a glimpse of the order book of the opportunity size. So talking about the defense opportunity size for 24-25, we have an opportunity size of around 6,000 crores. If I talk about the rail and metro business vertical, we have an opportunity size of around 58,000 crores, out of which around 44,000 crore will be from the rail and 14,000 crore will be from the metro. And if I talk about the mining has always been like that, in an opportunity size of around 3,000 crores every year. And that has been giving us a baseline till now.
Okay. And how optimistic are you that you can get a bulk of this? Defense, I think you mentioned 6,000 crores, rail and metro 58,000 crores, and mining 3,000 crores. What should be a rough hit ratio? This is the opportunity size, I'm guessing, and you would get some part of this.
Yes. The rough hit estimate should be around 50% in rail and metro, as well as mining, as well as defense. Whereas in mining, it should be more than 80%.
Okay, so in defense particularly, you're saying 50%, so around 3,000 crores. But the last time when we spoke to you, you had said that in the next 3 to 4 years, you can expect about 7,000-8,000 crores of defense orders. Do you stand by that, long-term target? And if you can tell us, where do you see the maximum opportunity in the defense space? Is it in high mobility vehicles? Is it in armor recovery vehicles? Just trying to understand where is the traction now?
You are very right. Let me correct you a bit. The opportunity size that I spoke about is for 24-25. And when I said that we can look at a number of around 6,000 to 7,000 crore, what I meant was that it will be the sales numbers in the coming 4 to 5 years. Now the opportunity size for us in the segments, in the core capabilities that we have presently for the coming 4 to 5 years is around 40,000 crores. And the bulk of it will come from the high mobility vehicles. The bulk of it will come from the combat engineering. The bulk of it will come from the armored vehicles. I'm not talking about, the diversification efforts that we'll be putting on, especially, the new business areas, new growth areas. If we are able to do that, this opportunity size will definitely double.
Okay, so that is for defense. Got it. Just to follow up on the metro order book as well, you said the opportunity size is 14,000 crores, and from that you're expecting to bag about 50%. So we're looking at about 7,000 crores for FY25. Correct me if I'm wrong. And from that 7,000 crores, can you tell us, what are the different projects across regions, Bangalore, Mumbai, Hyderabad? What is the kind of visibility that you have in terms of both getting orders as well as execution in the next 1 to 2 years?
First, let me talk about the order book, the order opportunities. Order opportunity is the Chennai Metro. There are 2 projects in Chennai. Then Mumbai, we have 3 projects which have already been announced. The tender is out. We also have, some extension in the existing order book for Bangalore Metro. We will have more opportunity for the Bangalore Metro, the new lines that have been announced. We also have the Patna Metro. So these are the opportunities that are right there in front of us. As far as the execution is concerned, we have basically 2 projects in Metro which are under execution. One is the Mumbai Metro, Line 2, Line 7, and the second is the Bangalore Metro for the 318 cars. So these are the 2 projects which are under execution presently.
Mr. Roy, good morning. Good to see you back on the program, sir. So, for each of these segments, defense, rail and metro, what is the outline of a visible pipeline over the next couple of years? If you can give us those numbers.
I think I gave you an outline about the 24-25 financial year.
Yeah,
and I also gave
beyond
an
24
outline about the next 4 to 5 years in defense and rail and metro. So we can extrapolate from that basically, and it need not be double in the next year. So what I can see is that from the rail and metro sector itself, there can be an opportunity size of around 90,000 crores in the next couple of years, including this year. And from the defense and aerospace, it should be around 50,000 crore for, it should be around 12 to 15,000 crore for BML.
Specifically on defense and defense vehicles, right? Armored vehicles, etc., which is a big focus area for the government, I mean, to strengthen border security, etc. Could you tell us what is the, is it going to be a fast growing segment as you see it? And what can be the opportunity size here, Mr. Roy?
If we talk about the numbers, you know, the opportunity size that we are presently having is around 6,000 crore, which hovers around the high mobility vehicle and as well as the armored vehicles. And there are various variants of the high mobility vehicle for different usages. For example, the platforms for the missile systems, platforms for the strategic forces command. So all put together, this number that I have just mentioned is all put together. And in the coming years also, the 40,000 crore of opportunity size that I just mentioned, it also is basically from the high mobility vehicle and the armored recovery vehicle, plus various variants of the same. As I said, you know, these are our core competencies, and the core competencies are the armored recovery vehicle, the high mobility vehicle, the combat engineering, the bridging systems, which form a part of the combat engineering, the mining, demining, mine layering equipment, which again are part of our combat engineering segment. And on top of this, we have developed some new capabilities in engines. So that should augur well for the company, especially for the main battle tanks that are to come in the future, as well as the existing fleet of the main battle tanks.
Just a very near-term question, Mr. Roy. With elections sort of upon us, will the first quarter largely be very small in as far as fresh order intake is concerned, or work goes on? Tendering, ordering, yeah.
Work definitely goes on. Already certain all these opportunities are in the pipeline, but yes, it may not fructify in the first quarter. It may go up to the second quarter or the third quarter.
Okay, all right. Mr. Roy, just to confirm, so your order book is looking good. The order book opportunity as well is solid. So, most analysts on the street, they believe that you can grow in high teens to around 20% on a CAGR basis for the next few years. That's doable, right?
It is definitely doable.
Okay.
You see, the last year, as I said, it was survive, revive, and thrive. So last year was survival for us. This year will be a year of consolidation for us. And last year we also had 3 signature moves which will drive the company forward. One was the engine, second was the Vande Bharat, and the third was the high-end mining equipment that we developed. And we can also expect at more signature moves from the company in the coming years, in the coming couple of years.
Okay, all right. So revenue growth of roughly around, on an average CAGR of close to around 18 to 20% is what we can work with. That's the takeaway that I'm getting for the next 3-4 years.
Okay. We can work with.
Yes. All right, let's work.
That is an uphill task, I must say.
That's an uphill task. And what's gettable? 15%, 16%? Is that gettable?
You see, we are aiming at 20%.
20%. Got it. Okay, so revenue growth is out of the way. I want to focus on margins. I'm reading a Prabhudas Leela note, and they're saying that they expect margins to scale to 13.6% in comparison to around that 10%. And the reason they've given is 25% of your workforce is expected to retire in the next 2 years. So employee cost as a percentage of sales will drop around 370 basis points. Do you think that's well and truly on? FY26, the margins are closer to around 14%?
You see, it's very difficult for me to, envisage that as at this point of time. What I can say is that the employee cost, we will try to keep it around 20% or around 18%. I don't see it coming down drastically. Number 2, even if 25% of the workforce is going to retire in the next couple of years, we are going to have new people on board. In fact, we have already started a massive recruitment drive, and the guys that we have recruited, they are expected to come on board by May. And if we have to grow, we need a workforce also. So the absolute numbers may go up, in terms of the revenue cost, in terms of the employee cost, sorry. But the percentage is likely to remain at around this number only. And as far as the margins are concerned, as I said earlier, definitely it will be a much improved number this year. We are expected to hit good numbers. Let us see how it happens. And in the future also, the number that has been speculated, it may happen if we are able to achieve our sales numbers. Because we have a fixed cost, which remains more or less the fixed in number. So as much as the revenue goes up, our margins also go up.
Okay, got that.
Simple,
You
simple
spoke about... Okay. You spoke about, 90,000 crore opportunity size in the next 2 to 3 years in rail and metro. I also want to understand, is there any pickup in activity in the international business? Because so far it's a very small portion, but I do know from the last time we chatted that you are looking to expand your presence there. Can you tell us what the next 2 to 3 years would look like and what's the opportunity size?
Well, in international business, traditionally, we have done only mining construction. 95% of our exports has been through mining and construction only. However, we are working on a couple of international projects for the metro sector. And we are also trying to have our maiden entry in the defense exports. So as far as the opportunity size is concerned, it is huge in the international market. But we would like to grow at maybe 5% to 10% as far as our exports are concerned in the coming 2 to 3 years.
So this international metro projects, any idea on what the ballpark size could be in terms of crores? What are we looking at over the next 2 to 3 years, and which geographies are you seeing maximum demand coming from?
The geographies are basically the Middle East and South America. And if I talk about the ballpark figure, it should be in the range of around 2,000, 2,500 crores as far as the rolling stock is.
That's over how many years?
That will be over the 2 to 3 years. Normally, that is the time which is needed for the execution.
Okay, Mr. Roy, on that Nigel's question on margins, last time we spoke, I think this was late Feb, you'd said that there is some reorganization of the company which is underway, and we'll hear more about it soon. Is there anything you'd want to update us with, sir?
Yeah, we have just restructured the organization, done a complete restructuring into strategic business units to have more focus, to have a better efficiency, to have faster decision making, and also creating a leadership pipeline. So we have just implemented it. We have rolled it out from 1st of April. And the results will take some time to come, but I'm very hopeful that it will be beneficial for the company. A lot of other organizations have already are already working with this model, and they have been pretty successful. So this is a tested model, time-tested model, and we are also pretty confident that this will reap very good dividends for the company.
Okay.
All right.
Rolled out from the 1st of April, as you say, and we'll see results over a period of time. Thank you very much, Mr. Roy. Good speaking with you, sir. Appreciate you joining in here on CNBC-TV18. Well, we'll slip into a break here. Just another reminder of, the event later today, that is India Exchange, which CNBC-TV18 is hosting, where market experts, industry stalwarts will collaborate in insightful discussions on India's economic path and the evolving dynamics of the Indian market. Mapping macros with city economists Samir and Chakrabarti. Later in the evening, there's a jugalbandi between market veterans Manish Chokani and Ramdev Agarwal. Return of animal spirits, V. Vaidyanathan, KK Mistry and Manish Kejriwal weigh in and chasing alpha with market experts Nilesh Shah, Prashant Khemka and White Oak Capital. Anish Tawakle will also join us. So tune in to CNBC TV18 today evening, 5:30 p.m. onwards.
Welcome back. Avenue Supermarts reported a very good set of numbers. So let's find out what some of the other players are doing in this market. V-Mart Retail came out with their Q4 business update. That showed an improvement sequentially. The Q4 same-store sales growth came in at 6% versus 4% in Q3. The company added 9 new stores in Q4, taking the total store count at 444. Now, to discuss the demand trends, we are joined by Anand Agarwal, the CFO of V-Mart Retail. Anand, thanks a lot. for joining us. So your numbers are showing an improvement on a quarter-on-quarter basis. But is that just because of a favorable base, a low base, or have you seen a genuine improvement in consumer demand?
Well, I think there is definitely some improvement at the ground level. We've been saying that in the past couple of quarters as well. So last 3 to 6 months have definitely improved. So there are two factors which are working here. One is there is definitely a slight improvement in the consumer demand, in the footfalls as well. And second also is a lot of effort that we had put in over the last 1.5 years in improving our internal efficiency in terms of the designs, in terms of the product that we are putting in, and also the price proposition that we are able to provide to the customer at a more sharper price point is, I think, yielding a bit of results. It's too early to say that whether this is going to grow further or how much it is going to grow, but definitely I can definitely say that there is some improvement at the ground level, and also some of the internal efficiencies that we've been building on have started to bore results.
Okay, but despite an improvement in the ground level, you continue to see a single-digit, low single-digit same-store sales growth. By when do you think you can get to double-digit?
Very difficult to predict, but all our efforts are always to maximize the growth. But I think in the midterm, I think we will still be wanting to make sure that we at least stick to high single digits, and that's what the goal the team has taken up, and we are all gunning to make sure that we at least reach there. If we are able to surpass that, that's even better, but that's something that definitely we want to target.
Okay, all right. Hi, Mr. Agarwal. Good morning and good to see you in, and good to hear that you're seeing at least some signs of improvement. We'll take that same-store sales growth of high single digit for the coming year. I want to focus a little on margins. And the acquired unit that you did, the acquisition that you did a couple of years ago was Unlimited. Now, out there, the margins are still relatively lower in comparison to the core business. When do you see it coming up to steam with what you're doing at V-Mart?
I think we acquired Unlimited 2 years back, and the last 2 years have really been a turnaround story. We've been building a lot in terms of how we integrate the product, how we change the product, how we get to a new set of customers who are more attuned to our style of offering of value products. And all of that is now started to show some results, because we've also seen a 13% like-to-like growth in the Unlimited business in the last quarter. Now, as far as the margins are concerned, I think once we achieve sales per square feet, increment of at least 15 to 20% in the next 1 year or so, we should be able to look at more healthier margin, which are more comparable to the group margins at a much more healthier level.
I just had one follow-up. You said same-store sales growth currently at about 6%. You're expecting it to go to high single digits. But I'm just trying to understand, some of your peers, like say a V2 Retail, right? I mean, they saw growth of 40% in Q4. Both of you are literally in the same business, but you're struggling to even see a 10% growth. Why is that?
I really don't want to comment on competitors, but definitely I think what we are trying to do is to make sure that we are able to leverage all our strengths and improve our operations and, gun towards a more sustainable growth, which we can deliver quarter on quarter.
Mr. Agarwal, good morning, Prashant here. Slightly out of the box question, and forgive me if maybe I'm going off tangent, but this is an area. I mean, you've got the network, right? Especially so in the Hindi heartland states. Have you gotten sort of offers from competitors, etc.? Is there? I mean, some sort of a M&A, etc. We could perhaps look at. Is that a possibility at all, or nothing at all?
Definitely not. At least I am not privy to any such offers. And even if I had something, I would definitely not announce it on national television.
But you're saying you don't have anything, right? Nothing has come up to you.
What if someone offered you?
I think I'll take it offline then.
Okay. But you're saying that you don't have it as of now. So tell us, elections is a big time, right? In UP, Bihar, all the states where you operate in. How is demand kind of holding up ahead of polling, which is expected to start?
So right now, as I said, I think the demand is definitely looking up. We are seeing more renewed footfalls. We are seeing much better conversions. We are seeing much better offtake in all the Hindi heartland markets. In fact, these markets had particularly been disturbed because of consecutive 2 years of bad monsoons. And this time round, we are definitely seeing a lot of interest. Now, the only challenge which I foresee in the next, at least around the time of elections, is elections usually are very disruptive, and especially in the rural areas. So whenever there are rallies or events, the towns do get disrupted, and that's a bit of a challenge. The second challenge also that I foresee is that Q1 this year unusually has very low number of marriage, auspicious marriage days. So there might be a bit of challenge at least in Q1, but otherwise at a more sustainable level, I am definitely seeing at least for the last 3 to 6 months, footfalls firming up, demand getting better, definitely as compared to the last 2 years.
Okay, and we were just talking about competition and how competition is doing very well. I understand that it must be a tough time for you, trying to navigate that. But anything that you are doing to sort of combat competition in terms of either pricing or penetrating the market further, and also in terms of store additions, what are we looking at in FY25?
So we opened roughly around 46 stores gross this year, and we also closed 19 non-performing stores this year. And we've been on a cleanup spree for the last 2 years at least. And I think in terms of store additions, we should be looking at around 45 to 50 gross store additions next year as well. In the current financial year FY25. There may be a bit of store closures again, maybe not more than 5 to 10, but that's what we have already planned for. In terms of the internal improvements, I think we've done a lot of work around our merchandise, a lot of work around how we supply to replenish to these stores, courtesy the new warehouse that we have set up, which is now fully operational. So there's a lot of improvement which has happened around the pricing and the value proposition that we are able to offer to the customer. And with this renewed product offering and much more fashion, because we have now also set up a full design team, which has been in the works for the last 1.5 years. So almost 40-50% of the products now that we sell at our stores is now internally designed. And that's a very, very big departure from our earlier, avatar. The second very big work that we have done is around quality improvement. So I can very safely say that amongst all our competitors and amongst all our peers, we would have the best quality at the price at which we are able to provide products to the customer. And that purely reflects in the loyalty rates that we are able to enjoy. So our loyalty rates have inched up from 60% to almost 70%. And that's the kind of sustainable growth that we are trying to build, both in terms of product offering as well as customer offering. So that's the moat that we are trying to develop on. Apart from the expansion that we have been, doing in our core areas, not really, dithering away into newer geographies, but basically getting into the cluster-based, expansion that we have always specialized in.
Okay, all right. Final question, Mr. Agarwal. Then you told us about Unlimited. What about LimeRoad? How far away is it from breaking even? Motilal Oswal has come out with the note, and they're saying from a loss of close to around 60 crores, they're expected to break even in FY25. It's on course?
So I'm not too sure whether we'll be able to break even at a full year basis, but definitely by the end of next year, we are definitely looking to break even that business, maybe in the exit quarter or so. But definitely the work that we've been doing is that we've been consecutively bringing down the losses every quarter. And that is what we will keep doing without compromising on a lot of, growth. But at the same time, at LimeRoad, the objective is not basically to build it as a top-line engine, as I said earlier as well. The objective is to make it sustainable and aid in the omnification of the overall V-Mart group. So the offline customer at V-Mart stores is able to shop seamlessly on LimeRoad, and vice versa is something that we are, trying to build.
Good to hear your thoughts, Mr. Agarwal. We appreciate you joining in. Wishing you all the best, and hopefully FY25 will be a cracker for you as well as your team. Well, let's get back to the markets. From the time we have opened up, actually, it's been a bit of a party pooper, because we started off, we were fresh all-time highs. We were up more than 100 points. The batsmen came out there smacking it out of the park. And suddenly quite a few wickets have tumbled in the last few minutes. And that's why the Nifty now has moved into the red. We're down close to 35 points. And we made this point earlier today. The start is going to be in the green, but we need to build on to that. In fact, the start was much better than what we anticipated. But take a look at a few stocks. Hero MotoCorp has moved to the low point of the day. Shriram Finance as well has seen a bit of a U-turn of sorts. So that stock is well moving lower. And I think a couple of larger names as well, like Infosys, L&T, When they turn, that's what puts pressure, and that's precisely what's taken place. Prashant, the batting order is looking a little bit sticky now.
Well, market breadth is also closed in now, Nigel. So we're back below the 22,526 level, right? Once again. Neither here nor there. Look at the advanced decline ratio. It's kind of closed the gap now on the indices.
But I also think it's important to point out that given everything, the Bank Nifty has been supporting this market quite a bit. So Bank Nifty continues to be in the green, although it's come off a bit. And it's sitting at a 1-month high. So, the consistent performance in the last 1 month. So maybe banks continue to play leadership here.
I think the biggest constituent, HDFC Bank, that's actually dragging the bank. If you pull up a contribution chart, I think bulk of the 250 points will be because of HDFC Bank. That's been the big drag on the index. Yeah. And if that comes to the party, then it's going to be very, very good times.
All right. Well, let's shift focus to Brigade Enterprises, the next company that we're speaking with. It's been a huge outperformer, 100% plus in the last 1 year. So there's a new development. Brigade has signed a joint development agreement with United Oxygen to develop a 3 million square feet office space in Bengaluru. The project is expected to generate a gross development value of around 340 crore rupees. Well, let's discuss this a little bit more. Nirupa Shankar is Joint Managing Director at Brigade Enterprises. Nirupa, great to have you with us here. Good morning. Thanks for your time. Prashant, this side. Could you talk to us a little bit about how much investment would you be putting in towards this project? Is this going to be the first of many? Do you already work with this particular player? Just basic hygiene details.
Hi, good morning. Thank you for having me. I'm not sure if I'm visible to you all, but good morning to you.
We can hear you clearly, Nirupa. Yeah, go on.
Okay. So this is a joint development project in Whitefield in East Bangalore, which is known to be one of the, I think one of the very good markets for office absorption in the city. Bangalore as well has been doing extremely well from an office absorption perspective. And this is the first time we're doing the project with this particular landowner and hope to do much more. And in terms of investment, it's a 3 lakh square feet project. And we'll be putting in the average construction cost of that we have for all our projects. And we're very excited because it's right on the main road, good metro connectivity. And I feel that has been the key for new office absorption. Having good metro connectivity, having good public transport, having good visibility. So we're excited about this.
So this, when you say gross development value, this is office space, right? So we should look at it as lease and rental kind of annuity earnings from this project?
So yes, this is office space, but when we put in the GDV, what we do is we take a assumed rental value and we divide it by a cap rate and figure out, suppose we were to sell it, what could we expect from the sales of this project if we were to sell it, but not necessarily is this a project that we plan to sell? We are planning to lease this project initially, and then let's see. It's just for GDV purposes, certain assumptions are made.
Okay. Nirupa, hi, good morning. I wanted your views on what the rentals could look like. What are the realizations? What are the rentals that you're seeing right now in the commercial space? And how is it compared to what it was, say, 6 months ago?
See, the rentals have been quite stable. Every year, there is typically a 5% escalation in most contracts. We've been able to hold on to that kind of an increase annually. So despite COVID, we've been able to handle a 5% increase in our rentals. So today in White, rentals are anywhere between 60 to 65 rupees for a grade A project. Sometimes it could be lower for older projects, could be in the range of between 260 as well, older projects and depending on the location. But projects with good location and road facing and marquee projects are getting at least between 60 to 65. Now, in 3 years, the way we estimate it is, with a 5% increase per annum, what we can expect there. So in 3 years, I would increase 15% over the existing rentals and assume that value for a rental in 3 years.
So can you give us for this particular project with United Oxygen, what is the expected rental or realizations that you're looking at?
So for instance, in the GDV, as I mentioned, we've mentioned about 340 odd crores. So the assumed rental is around 75 in this case.
And how much of money are you investing in this JV?
See, typically it's a joint development. It's not a joint venture. Typically, we do our projects as a mix of 50% debt and 50% equity. That's typically what the the financials work out. So accordingly, we'll put in the average construction cost. Typically, average construction cost, again, it can range anywhere from 3,500 to 4,000 rupees per square foot plus GST and other expenses.
So in terms of an absolute number, what will it be for the project, for the JDA that you're talking about? Absolute terms?
I'll have to calculate that. But like I said, it's a 3 lakh square feet building, and I've given you the construction cost. Yeah.
Got it. And just to reconfirm, for the end of this year, you were targeting around 700 crores of rentals, right? For the piece, for the entire company on the whole.
Yes, that's right. That's right, including our office and retail portfolio.
Nirupa, we can see you as well now. So good to have your video on as well. Just one thing, Nirupa. Is the market as buoyant, as strong, even as a lot of new supply also keeps coming in, the Bangalore market?
Yeah, I think the market is very strong. Overall in real estate, we're seeing decadal highs across most industries, whether it's residential, whether it's hospitality, whether it's retail is also doing extremely well from a sales perspective and sales volume perspective. The office market as well has been quite resilient. In fact, quarter on quarter, I think for the market overall, there's been almost a 40% increase in the overall country market. So I think for this quarter, I think the country has done about 11 million odd square feet of office absorption. And I would say 50% of that can come from markets like Bangalore, Chennai, and Hyderabad. So overall, we are seeing a pretty resilient market. I know that India is sort of a bright spark across what we see globally. Globally, there is a bit of gloom and doom when it comes to office, whether it's the US or Europe or Australia and markets like that. But India and Asia, but India specifically, has been quite resilient in the whole office absorption space. So we are seeing pretty good traction, and we hope that this momentum continues.
So do you have any plans to expand into new geographies like some of your peers, like Prestige, for example, is getting into Bombay in a big way, gotten into Bombay in a big way? Do you have any plans? And what is the land bank that you're looking at right now? Are you looking at more land buys or expansion?
We've held on to this statement for a while, saying that we will be continuing to focus on our key markets of Bangalore, Chennai, and Hyderabad. Of course, there are other smaller markets that we may look at for some amount of office, such as Kochi. GIFT City is also a place where we have some presence. So GIFT City is doing quite well right now. So we might look to do something more there. But apart from that, we typically, again, our strategy has been a mixture of outright and joint development. For office especially, we've been doing a lot more joint developments just because commercially that makes a lot more sense for us.
All right, Nirupa, final question before we let you go. Both for your company as well as for the industry on the whole, what has been the impact of the water crisis on construction? Tell us more.
Yeah, I think water crisis is hitting certain parts of Bangalore. If you look at it, the north side of Bangalore, the west and the south are not so badly hit. I think the grave water crisis is mostly in the eastern parts of Bangalore. What we need to do as responsible builders is to make sure that we use only treated water for construction purposes, don't use fresh water for construction. We have to make sure that, we do all our rainwater harvesting, recharge pits. We need to increase the water table in all our projects. So we need to make sure that we house a lot of rainwater, make sure that anytime the rains fall, we're able to, again, harvest all that water. And those are the measures all of us need to take. It's possible to have water surplus in some of our projects. We've seen that even in East Bangalore projects, some of them have water surplus because of the responsible measures we have taken. But that said, it is a great situation in East Bangalore. And I think as a city and as builders, we need to sort of make sure we do all the responsible things required to harness as much of the rainwater as possible and store it and use it effectively. And of course, treat as much as the wastewater and make sure we're all net zero water.
Okay, well, very important there. Thanks a lot, Nirupa, for joining in, and appreciate your thoughts here on CNBC TV 18. Well, for the market, it's not bad. It's just consolidating around the 22,400 level. The mid-cap index is actually doing quite well at the moment, up 134 points. And the bank nifty is supporting the market. So the mid-cap index has picked up from the lows. Some dips are getting bought. Let's slip into a quick break. On the other side, we'll put focus on the commodity space. Manisha Gupta will be joining in. Stay tuned.
Bharti Hexacom Limited.
Welcome back. Well, I just want to point out a couple of stocks that are hitting fresh highs. Although the market may be flat, just take a look at it. Indian Hotels is now at a fresh high, and this entire tourism space has been playing out very well. The other stock to look at is Inox India. Now, if you remember, Inox India, the IPO came in December of last year at around 600 or so. The stock today is at 1300. Big moves coming in on Inox India. The issue price was 627 rupees. It had a strong listing and now it's built on to its gains, more than doubled from its IPO issue price. But Mitesh Thakkar is here with us to give us more views on the market. Mitesh, what are the stocks that you're looking at?
Yeah, I think, there's some negative crossover on the charts of Reliance, so there could be profit booking. So a very, small pullback can happen. Take a short at the stop at 2950 and a target of around 2880 or thereabouts can happen over here. And the other stock which I like is Bharat Ford, which I would recommend buying once it crosses 1155. So it's making a bullish pattern. It needs to give a breakout above 1155. Buy then with a stop at 1137 for targets of 12.
All right, thanks a lot for that. Let's hop across to Manisha Gupta now to tell us about the commodity markets and what she's tracking there. Manisha.
Thank you for that, Sonia. Well, I'm looking at metals which are definitely on a high. There's a lot of support coming in for the sector from the way the dollar index has been behaving. From a 4.5-month highs, we've seen the prices decline by 1%, and that has been supportive. Also, the US Fed Powell statements yesterday where he said that lower policy interest rates would likely to be appropriate at some point in time in this year itself is where the gold and silver prices and metals seem to be taking a lot of support from. And then there are geopolitical tensions in Middle East. Markets still are looking at the impacts of earthquake that is in Taiwan. So tangible commodities actually are getting bought into. Also strong economic data that we saw come in from China for the month of Feb and for the month of March as well have been quite supportive. I want to take you through various metals and how they are trading at this point in time. So starting with copper, that one is at a 13-month high. It's trading very close to all-time highs in China. Aluminum has surged quite strongly. It has been an outperformer for last week or so. 13-month highs on that as well. Zinc has been jumping up 9 weeks high on that. Silver clearly has been an outperformer within the precious metal space in last couple of sessions. 26-week highs on that. And silver in last 2 days have jumped up by nearly 8%. Platinum also is trading at a 12-week highs. Actually, the way we buy gold in India is how Chinese buy platinum in sense of weddings and, rings, etc. So China's retail buying also has been on the stronger side. But the price clearly goes to gold, which has extended rally to record highs, now trading above $2,300 an ounce. When you look at the June futures there, they're trading at $23.25 right now. So there is a big contango, and you are looking at the further months actually trading much in the positive. For the Indian market, 70,000 is done now. And if you are going out, stepping out to buy 24 carats gold, adding all the taxes and everything, it comes to 72,000 per 10 grams of gold in the physical markets there. This is what we've done on a week-on-week and a month-on-month basis. So gold is gained up by 3.5% in this week, is up 10% on month. Silver outperforming with 9% of gains and 15% in last 1 month. Platinum as well continues to do well. I also want to bring in the industrial metals right now because we've seen stronger gains come in for this. In that case as well, copper, aluminum and zinc have done quite well. We've seen nearly 6 to 5% of gains on a week-on-week basis and 5 to 11% of a jump up on industrial metals in last 1 month as well. What the street will now watch out for clearly is going to be the FOMC meeting on 10th and 11th of June. But ahead of that, it is the US non-farm payroll data. Well, that comes in on Friday.
All right, let's slip into a quick break on that note. On the other side, we will be joined by Ajay Agarwal, the co-founder of Go Auto, and Vinkesh Gulati, the chairman research at FADA, to discuss the fall that we've seen in EV demand globally. Remember, Tesla last week announced that their sales in Q1 fell 9%, a fall in sales for the first time in 4 years. So we are going to talk about whether there is a big slowdown underway and what are the key trends in India. More on that coming in.
What does you...
Welcome back to Bazaar Morning Call. Well, globally, the demand for electric vehicles seems to be slowing down. Last week, Tesla reported a 9% year-on-year fall in sales, which is its first year-on-year fall in the last 4 years. And Tesla spoke about how competition has heated up. In fact, in the letter to its investors in January, Tesla predicted notably lower sales growth this year. What does this mean for the Indian EV market, which is in any case struggling with penetration, especially in the passenger vehicle space? We have Ajay Agarwal, the co-founder of Go Auto, and Vinkesh Gulati, the chairman research at FADA, joining us now. Gentlemen, morning to both of you. Ajay, let me start with you. This kind of slowdown that we've seen in the large EV players globally, do you think this is a blip or is it structural in nature?
I feel it's just a blip. In India, it has not been the same story. The Indian market has been growing. If you see, compared to last year, the Indian growth in passenger vehicle was almost 45-50%. So I don't see that Indian market getting impacted by the global trends in EV.
Okay, so this is just a blip, you're saying. Got that. Yeah. Vinkesh, what about you? What are your thoughts? Because, you know, Tesla is also coming off a very high base, right? I mean, it's in consistent growth over the last many years. And this is the first time in 4 years it's seen a bit of a knockdown. Do you concur with Ajay's view that this could be just a 1 or 2 month phenomenon and the structural growth story is still intact globally?
So I feel yes, it's a blip, but the kind of growth or the kind of positiveness we have been seeing in EV for so long abroad, I feel the story is not similar going further. So after the blip, whenever we see in 2-3 months the EV going up globally, it won't be at the same rate how we have seen for the past 5 years. But like Ajay said, he's totally right. India is a different story. But when I talk of globally, it has been many years since EV is prevalent there. It has been stabilized there. People have experienced 3 years, 5 years down the line, knows the positives of running an EV for more than 5 years. So obviously, it's not in the same positive mode as it is in India today.
Okay, got that. So India is a very different story is what you're saying, right? So let's talk about the Indian market. And I wanted Ajay's view first on this. Ajay, if you look at the PV, the passenger vehicle electric market in India, the adoption is very low at just about 2% odd. It could be for several reasons. There are limited model choices. The price points are much higher. The EV adoption itself has struggled quite a bit because of, range anxiety issues, charging infrastructure issues. But where are we right now? And what do you think is the need of the hour for EV penetration to increase in India?
See, this year, in 24-25, I feel, there will be more than 15 new product launches by the different OEMs. All mass market players, top 5 players will launch their new models. Everybody will have a EV portfolio in their hand. So we see that this year, the EV growth will be much higher compared to previous years. Yes, I do agree there are challenges in terms of when it comes to a consumer in terms of EV adoption. Still, there's a lot of challenges in terms of charging infra. There is a problem in terms of setting up the home charging. The public infra is not so good. The power availability is not so good. Secondly, the product choices are limited. Customer has a range anxiety issue. The cost of ownership is a problem. So I think once these problems are addressed, the market will grow much faster and much stronger.
Vinkesh, come in on this. Ajay was pointing out the number of problems that have been a hindrance to EV penetration. But these are problems that have existed for the last many years. Why do you think, solutions have not been found whereby there's more penetration? I mean, we're talking about what? PV penetration is sub 2%. Even two-wheelers, which is picking up, quite a bit, the penetration is just about 5-6%. So what is lacking, you think?
See, as of now...
Sorry.
Vinkesh, go ahead.
Okay, so as I feel the options available in the market is majorly skewed towards non-EV. So if you see on the car fronts also, there's one only OEM, Tata, who has some products where they can say there are 3 or 4 products. If you leave apart Tata, all the other OEMs' presence in EV is just a showcase. One product and that too not doing great. Some 100 numbers, and if you see in a year it's some 1,000, not even big. Similar happening in two-wheeler. So you have some 30-40 odd models of two-wheelers available where the fuel engines are. But when you start counting on EV, there are 10 or 15 good models which are available. And obviously, this availability across the districts in India is also limited and restricted. So the customers don't have choice and reach also on the dealers front where they can get such vehicle. What I think the OEMs are still not very focused on the electric vehicle front. There are some OEMs who are actually anti-EVs. There are some who are working towards that. But like Ajay said, we'll have to watch another year. I feel 2025 would be the year of big bang EV launches from all the OEMs. And when we have EV options available with all the OEMs in India, surely the ratio will go up, but not as high as what the government is expecting. So like latest I heard 2030, they expect 30% of passenger vehicle, some 50 or 80% odd from two-wheelers and three-wheelers. This is some kind of numbers where unless and until government goes out of the box and supports in subsidies, which is, as of now, you see FAME 3 has gone down, I don't think those percentage happening. But yes, EV ratio will go ahead year on year or month on month also.
Okay. Ajay, jump in on that. I mean, Vinkesh made a very good point. Options are very limited and the OEMs are not very serious. Apart from the Tata Group, there's no other OEM that has a comprehensive EV model. But it could also be a chicken and egg situation because, there is still charging infrastructure issues, there is range anxiety. So maybe OEMs prefer to go slow. Your thoughts here?
See, if you see off late, last 3-4 months after the price revision by Tata and MG, the mass market models like Tiago EV and Comet have started growing. So it's not fair to say that consumers are not accepting the products if it makes sense in terms of cost of ownership, entry cost. So the acceptance is there. The challenges are there definitely in terms of as of now all OEMs are not so aggressive in terms of pushing the EV products. Once every OEM has a decent EV portfolio, I think market should naturally grow. I don't see a challenge there.
You want to comment specifically, Ajay, on the two-wheeler market because, it's been consolidating for a while with 6 to 7 large players, out of which 4 players enjoy 80% of the market share. Do you think that could be the dynamics even over the next couple of years? And now you have the PLI also that has been approved. So how do you see the market dynamics change in the two-wheeler EV space?
See, again, in two-wheeler, the same problem. The OEMs who are already the leaders are not very serious. If you see the top players, Hero, Bajaj, Honda, they're not very seriously, having a EV portfolio. The EV is, as of now, being, the startups are leading the EV ecosystem. The automobile is not a business wherein, you can build the channel, you can build the infrastructure overnight. It takes time to build that. Unless the existing OEMs try and build that, use the existing infrastructure to push the EV, it will take time.
But can it also be the case that, as you mentioned, right, startups are leading the EV ecosystem. Vinkesh, I want you to come in on that. Will it be very tough for the startups to sort of scale up this business in a big way? And is it mandatory for the incumbent players, the legacy players to sort of scale up their business for the penetration to take off in a big way in two-wheelers?
You're right on your point. See, companies like TVS who have really gone out of the way to launch EVs through their regular regular dealers have really seen some tandem going on. They are doing now 12,000 plus or 15,000 every month, which is the only company legacy player who is doing something in EV. Like you talk of Bazaar, they have only one product, which is Chetak, and also their presence is not there all over India. Talk of Hero. They have come through one product and still their presence is less. Honda motorcycle has yet not launched an electric vehicle in India. So if you see the legacy players, I feel they are still waiting for I don't know what. But unless and until these 4 legacy players go out of the way, have an EV portfolio through their regular dealers and don't think of having a special EV dealers separate, then the reach becomes a problem. So until and unless that happens, I don't see EV market going big in two-wheeler. No doubt it's one of the best if you talk of compared to cars or CVs. But still, the melting point or the top point is still there. I'll give you a small example. I'm talking of one small district where one OEM sells 1,000 products per month, whereas its EV portfolio is selling 30 vehicles per month. And that's how where major districts of India is going through. If you talk of the leave apart the TVS for Hero or Bajaj. And that is where the major problem is. Similar what is happening in passenger vehicle is happening in two-wheelers also. The OEMs are not focused towards EV and they're not coming up with options.
Okay. Ajay, one final word from your end. Is Chinese competition a big threat in India? Because globally, Chinese competition has sort of, become a big threat. But what about the Indian markets?
I don't see that. See, last few years, we have been hearing a lot of stories of Chinese PV makers coming in, Great Wall Motors and other players. But it's very difficult. Automobile is not a fly-by-night operations you build up quickly and then establish. So I don't see much challenge there. And definitely the rules and regulations and the laws doesn't give them a free way to run the business in India.
Got it. All right, gentlemen, we've run out of time, but not out of questions. Thank you so much for explaining, the entire EV ecosystem to us and the slowdown that we've seen globally after Tesla announcing that they've seen a drop in sales. With that, it's curtains down on Bazaar. Thanks a lot for watching.
Bharti Hexacom Limited.